Okay. People, good morning. All good? Did you revise what happened yesterday? Kind of okay. Manageable. So today we'll be starting with your IPO related proceedings. How to go for a fundraising in capital markets. Okay. Highlighters invested. Cool. Okay. Where is Yaminia? Okay. Okay. Now. Okay. Okay. Now let's start with today's topic, which is regarding IPO. Okay. So people, what is IPO? What is IPO? Unlisted public company going for listing and public issue for the very first time. Okay. So expect direct questions from this chapter, like very comfortable topics. But there are a few points which is extra when compared to sales executive. Few points are added back. This was also every provisions here given under this topic was also part of a CS executive. But when they wanted to have a dilution of the chapter, CS executive, they have deleted a part. The same portions remains as such in your CS professional. So, set to go with an IPO. These are the entities. These are the entities which are not entitled to go for an IPO. So, law first topic is regarding. So, who are the entities which are not eligible to go for an IPO? So, tell me, if the issuer, meaning the company, promoters, or promoter group, or directors, or selling shareholders, we'll discuss what is selling shareholders later, when they are debarred from accessing capital markets by SEBI. When the issuer, promoters, promoter group, or directors, selling shareholders are debarred from accessing capital markets by SEBI, then you don't have a choice of going for IPO. Second, sir, company A is going for an IPO. I'm a promoter of company A, but I'm also a part of a promoter group of company B, which was earlier debarred by accessing capital markets by SEBI. So, if promoters, directors of the issuer is also a promoter, director of another company, which is debarred from accessing capital markets by SEBI. Yes. Issuer, promoter, director is a willful defaulter or a fraudulent borrower. Promoters, directors is a fugitive offender. First 4 points. Fugitive economic offender is a person who has done some economic violation, like flew away. Willful defaulter, fraudulent borrower. So, if the issuer, promoter group, directors, and selling shareholders debarred from accessing capital markets by SEBI, then you don't have a choice. Or promoters, directors, issuers of a promoter or director of another company which is debarred from accessing capital markets, then also you can go. Meaning common directors. Then issuer, promoter, or the directors are a willful defaulter. Again, you don't have a choice. Or you're a fraudulent borrower, you don't have a choice. Go for IPO. Promoter, director is a fugitive economic offender. Again, you cannot go for IPO. Yes? Cool? Now, people, I'll explain point number E before that. Sir, if the point number A and B, if the debarment is already over, you don't have a problem. When you are filing the prospectus with the SEBI, draft offer document with SEBI, at that time, if your debarment period is over, then we don't have a problem. At the time of filing, you shouldn't have been a debarred person. If the debarment period is over, then you have you don't have a problem. So A, B, C, D and exception. Okay. Okay. A, B, C, D and the exceptions are fine. Only no. Good. Okay. Now. Okay. Hello, Raghavi. Raghavi, you are the same Raghavi from Chennai? Okay, nice. Okay. Okay. Now, people, if there are any outstanding convertible securities, or any option to receive equity shares, option will come under where the employee stock option. By sweat equity you will get an option. Employee stock option only you will get an option under an stock option. Okay. Are required to be converted. So again, last point is if there's some convertible debenture or stock option to be converted into equity shares, then also you don't have a choice to go for IPO, because there are already some shares happening. Shares are yet to happen. They're telling you you don't have a choice. A, B, C, D, E. E point, you know how to mark. Outstanding convertible security, any option to receive equity shares pursuant to a stock option are required to be converted. Then you don't have a problem. I mean, you have a problem. Otherwise, it's completely fine. Online, okay, Ada? Cool? No. People. Now. Sir, some technique, say for example, red herring prospect is a technical word, which I'll do it later. It will come gradually. Now, for the time being, whenever I'm explaining a point which I'm not properly explaining, that means it will come later. So as I told you, generally you have two exceptions. Like what? You can't issue something when there is a convertible thing pending. Assume that there is an employee stock option granted to an employee. Person to employee stock option. In compliance with law. Okay. They're telling you, yes sir, I understand that convertible securities are pending. You don't have a choice. Again, they're telling you, sir, if I have a employee stock option, that is asked per law. As I'm saying, so next December only it will be converted into equity shares. You have an option to buy. Can I go for an IPO in October? 100% okay. Because these are predetermined terms and conditions. One. Sir, I have a convertible debenture. Okay. Don't worry. Before you file prospectus. Now that's why. Underline only those things which are important. Before you file prospectus, if the conversion happens, we don't have a problem. Second. Sir, this is the additional point. If you're using old material, you don't have. But anyway, no old material. No students, no. Third point. Say for example, similar to stock option, there is some other thing called as stock appreciation rights. In a share-based employee benefit, there is some topic called stock appreciation right. That is also been added back. Previously, there was only 2 points: stocks and debentures. Now, along with stock, some other stock appreciation. Again, employee stock option. So, 2 points with respect to employee stock option. One, employee stock option. Second, stock appreciation. These things are there. As per compliance, we don't have a problem. There are convertible debenture. Yes, it will be converted before the date of filing prospectus. We don't have a problem. So even if there should be so A, B, C, D, A and B, we had a explanation. E point also we have an explanation. Not applicable. They blindly said, oh, you sir, you have a convertible security, you don't have a choice. But exception, 3 scenarios. Stock option, stock appreciation as per law, or convertible division, which will be converted before your filing of offer document. People okay with me? Don't overdo, because some things are slow, totally lengthy. Online with me? Okay. Now people, eligibility requirement. So these are people who are ineligible. Correct? Entities not eligible. So regulation number, if you want, you can remember. I'm not forcing you to remember. Keep it. You should be knowing the points. Now, people, eligibility requirement for an IPO. What are the requirements for an IPO? Like, this is all about your financial requirement. They can ask you, probably they can ask you a sum also here. To know the sum, it's everything will be given in book. But you should be like thinking 3 years, average, basic calculation should happen. So I'm not going to explain what is all this, but understand there could be one sum also, expected question. They have not tested, but probably being a finance paper. Sir, the issuer, the company should have. So this is more important. The issuer, we are talking about an issuer. Issuer has net tangible asset of at least 3 crores. Okay. Issuer has an average operating profit of at least 15 crores. The issuer has net worth of at least 1 crore. So what are the 3 points? Basic points. So first, sir, I don't remember any points, sir. Basic theory. Issuer should have 3 points. What, sir? Net tangible asset of 3 crores. Average operating profit of 15 crores. And net worth of at least 1 crore. Okay. Sir, where, sir? Last year only? No. Okay. So when should I have? Only last year, sir? No. Last 3 years I should be having. Okay. Sir, how do you expect this amount to be there, sir? Summa? No, sir, there are some miscalculations and all. Okay, I don't want. Do one thing, realign everything. Sir, I should write realign? No, you should use the word. Sir, if there are some mistakes and all, no, sir, do one thing, properly redraft your financials. You use the word restated and consolidated basis. Okay. Okay. Now let's go with B and C. Okay. 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 So B point. So I want you to give me yes or no. No explanation. Unless I provoke you to give an explanation, don't give me an explanation. Okay. Second point is regarding average profit of 15 crores. So they can ask you a question whether the company is compliant with this condition. People, scenario question number 1. All the question belongs to you. Manoj. Okay. Mahesh, Manoj confused. I was thinking. Okay, Manoj. Super. So all the questions belongs to you. My average profit for the preceding 3 years are 20, 40, 60. Can I go for IPO? Okay. 30, 30, 20. Okay. 30, 10, 20. Yes or no? Okay. 30, 10, 20. You can't go. Okay. Others 30, 10, 20. Can we go? Why? We can go. Why? It's average. Average profit. Yes, sir. So work on that thing. They never use on each year. They use the word average. Okay. Now people, 10, 10, 10. Possible? Why? Average comes to 10 only. 60, 10, 30. Okay. 60, 60, 0. No. Even they talk about average, they are very specific on the point that there should be profit in each years. Clear? Last line. Online. Clear? Super. Okay. Done. So next question. Net worth of at least 1 crore. Average, no, every year. Restated and consolidated basis. So what is net worth? How will you calculate net worth? Usually you will have that net worth given in material. If in case in the question is silent, use this thing. Equity, share application money, reserves and surplus minus miscellaneous expense not written off. Asset minus liabilities one approach. That's very easy. They will not ask. If in case they are asking, think about these 2 points. Equity, share application, reserves and surplus minus miscellaneous expense not written off, deferred tax assets. Put together will give you your net assets. To keep that in mind. Net worth. Be like this. Online, keep that in mind. What if they ask you a question? I'm not going to explain these things, but yes, you should keep that in mind. Okay. Now people, first point. Now that's done. 2 points are okay. B and C are okay. Let's go with point number A. Sir, I should have a net tangible asset. Meaning I should have an asset of rupees 3 crore in a restated and consolidated basis in all the 3 years. All the 3 years. Meaning I should be having throughout the year. So starting I had 5. Between I sold 4. I repurchased 5. That is also not allowed. Because throughout the year you should be having 3 crores of net tangible asset. Net tangible asset in 3 full years. Meaning throughout the year. Clear? You're able to interpret things now. Which not more than 50% is held in monetary asset. However, if more than 50% is held in monetary asset, the issuer has utilized or made firm, you have to entirely mug up that point and tell me what is that point.
Years, in full years, sir, and if we have more than 50% of the assets in monetary assets, then he should use that only for business or other business related activities.
Should that or firm commitment? They use the word firm commitment. Meaning?
Definitely, condition must.
They should make some arrangements.
Okay. You have a net tangible assets. How much you should have? 3 crores. So tangible asset can be plant and machinery, land and building, cash. So also asset, no. Assume that they are telling you these 2 things put together can be 2 crores. This can be 1 crore. But it is opposite. This is 1 crore, 2 crores. Monetary asset is more than 50%, which is not allowed. Monetary cash basis cannot be more than 50%. Sir, what if the scenario happens? Now, sir, you cannot have more than 50%. No, Yes, sir, I understand. You cannot have more than 50% in cash. If there's cash, tell me why you have. So companies explain that, sir, this 2 crores I'm maintaining cash because I'm undertaking a project. I'm going to undertake a project. I have a firm commitment. I have this purpose. So if you can explain the purpose, why more than 50% held in cash, they'll give you an excuse. Otherwise, they will not allow you. So the law is telling you not more than 50% should be held in cash. If more than 50% held in cash, you don't have a choice. But law is given exception. If you can explain what is your commitment, why you are having that much amount in cash, liquid cash. If you can prove them there is a commitment you have, then law is not having a problem. Online, Ishwar is borrowing not, is having the asset. How do you take it as borrowing? It's my asset size. Cash and cash equivalents in my balance sheet. People are okay, comfortable. Okay, not confusing. Online, you can give a thumbs up if you're okay. Okay, all good. Done? Online okay then? All good. Online? Good, everyone? Now, point number D. In case the issuer has changed a name within last 1 year, at least 50% of the revenue collected in a restated and consolidated basis for the preceding year shall be from that activity indicated by the new name. Okay, chill. If the issuer has changed his name in the last 1 year, at least 50% of revenue calculated on a restated and consolidated basis has been earned from the activity indicated by the new name. Okay, any idea? Any idea what this topic is all about? D point. If the issuer has changed his name, then 50% of the revenue should be from the activity indicated by the new name. Why this provision?
Mislead the investors.
Good, good. People, okay. Let's assume we are Swiggy. Swiggy will have different segments. Your name is Swiggy. You have different segments. What are the segments? The Instamart, food delivery. Then dine in. Okay. Assume that there's one more industry now which called organic. Organic. Now, people, the demand for organic food is moving on a very high side. Now, I felt that instead of going for IPO with Swiggy, name Swiggy, I should go with Swiggy Organic Limited. I'm changing the name to Swiggy Organic Limited and going for IPO so that people will be interested in subscribing the shares. Now, law is telling you, okay, you're free to change the name. Now you are doing what? Name change. Swiggy Organic, and you're going for IPO. Now they'll ask you a question. Okay, when did you change the name? Last year, sir. Okay. Oh, and immediately you're going for IPO? Yes, immediately I'm going for IPO. Okay, tell me the revenue proportion. They're telling, sir, Instamart is giving me 30% revenue. Food delivery is giving me 40% revenue. Dine is giving me 30%. 10%. Now, your activity indicated is just contributing how much only? 10%. You can't go. If they change the name with the goal of going for IPO, then the activity indicated by that new name should be reflecting at least 50% in your revenue model. If not, we will not allow you. The company has changed the name to get the market. That's the intention. Then 50% of the revenue should have attributed to the company from the activity indicated by such new name. Organic. Okay. Online. Good point. Everyone. Urmila, all good. Good. So that's a key point. One of the key points. Activity indicated by new name. Now, sir, what if I'm not able to meet this condition? If you're able to meet the condition, you have a proportion. That's a proportion to whom you have to give or not. That is not in the executive syllabus, you have in professional syllabus. So, now for the time we understand, if the eligibility conditions are met, I can plan according to my wish. Who are be the allottees? But if not, can I still go for IPO? Yes, you can go for IPO. Sir, the conditions are not met, you can still go for IPO? Yes, provided from your offer size, 75% should be allotted to QIBs. Meaning, that is again a challenging thing. QIBs will have their own benchmarks, whether to invest or not. Now, law is telling you, if you are not able to fulfill the following conditions, again you can go, provided out of a total issue size of 1000 crores, 750 should be allotted in the name of qualified institution, like your buildings, mutual fund units, scheduled banks. If these people are willing to invest in 750 crores, then irrespective of the fact that you have not complied with the conditions, you can still go. So if it's these conditions are met, you can go. Conditions are not met also, you can go, provided 75% is allotted to QIBs. Okay. If the conditions are not met, still you can go. %75% are allotted to QIB. Easy. Good. Clear? Okay. Okay. So next few pages we don't need. It was completely completed these pages. Till you now go to yes. Now come to page number 244 regarding general conditions. So we have done two topics. One, ineligible, eligibility conditions. Now general conditions. Heading is very important. They ask a general condition, you cannot write this condition. All are conditions. Ineligibility condition, eligibility condition, general conditions. Okay. Okay. People, general conditions for IPO. So what are the general conditions which I have to keep in mind? Sir, I know you have to go through that window. Before going to window, what you have to do? Parallel world listing. It has made application to one or more stock exchanges for taking in principle approval for listing. Sir, one or more stock, can you take 5 stock exchanges? Yes, that you take. But choose one as your main thing. But choose one of your thing as main, designated. So you can choose multiple stock exchange, but ensure that you are choosing one of them as your designated stock exchange. Good. Sir, shares should be issued in demat form. So you have to enter an agreement with depository. Okay. Ensure that all the specified securities held by promoters are in demat form prior to the offer. Make sure all the shares held by promoters are in demat form. Sir, what about existing partly paid up shares? Either you make fully paid or forfeit. Existing partly paid up shares should be made either fully paid up or forfeited. Sir, outstanding convertible securities, please convert. A, B, C, D, E are easy points. Now go to E point. E point. Complete point. I am not marking anything. Complete point. I mean ELF point. it has made firm arrangement of finance through verifiable means towards 75% of the stated means of finance for a specific project proposed to be funded from the issue proceeds, excluding the amount to be raised through proposed public issue or through existing identifiable internal accruals. Good complicated point. So it is made firm arrangements for finance through verifiable means towards 75% of the stated means of finance for a specified project proposed to be funded from the issue proceeds, excluding the amount to be raised through proposed public issue or existing internal accruals. Any idea?
Before going into IPO, we should get a difference from 75%. We should get from.
Then why should I go for IPO?
The firm thing, we should arrange something like a backup, not to make it as a failure kind of thing.
See, if you think IPO is not working, there is a backup. Then how do you think that backup will be effective?
If there is a project,
The moment you say project, I understood. Okay. Oh, if you have a project, project, சொல்லுங்க.
they
What
have
is it?
divided a separate
போதும். Super. Okay. The moment you said project, now you understood, you remember the points. Okay. Think like this. So people, I'm going for an IPO. I will not let you shine, da. I want that. This is an IPO. So what your purpose of you have it? Good. Specific project, very good. Okay. Shouldn't have done this. Okay. So people, there's an IPO project. So how much you are raising? Say for example, I have a project in which project cost is 1,000 crore rupees. 1,000 crore rupees a project. I'm going to have a gift city. My company is going to develop a gift city. 1,000 crores for a project. Now ask them, okay, how much through IPO? They're saying IPO amount is 800 crores. Hey, IPO 800 crores are so 2,000. So remain 200 is in my reserves, or 200 I can arrange from my promoters. 200 I can arrange from my bank loan. Assume 200 crores comes from bank loan. Okay. Project cost is 1,000. Law is telling you before you go for IPO of how much amount? 800 crores. But your total cost is 1,000 crores. Make sure you told us no 200 crores is okay for you. 200 crores is okay for you. Prove me that 200 crores into 75% is available. Show me. Proof that you have at least 75% of 200 crores ready. Verified. So, if there's a project in which you are going for IPO and other mix, other part, meaning excluding the IPO, whatever be the case, that part would 75 should be ready. If that is ready, then law says you're free to go with IPO. Online. Everyone da? Geeta Lakshmi, all good? Okay. Please stop me when you are confused. Okay. Okay. Now let's go for next topic. Very tricky point. Again, you people will be knowing 25 plus 25. Okay, 25 plus. So I go with a rule called as, okay, let's keep it simple. You people know 25 plus 25 rule? Nothing. 25 plus 25. Raghavi, you remember 25 plus 25 rule? Okay, let's keep it. Okay. Good, super. So people, rule is simple. 25 plus 25 is equal to 35. Rule is simple. 25 plus 25 is equal to 35. That's our equation. Okay. 25 plus 25 is equal to 35. Okay. Sir, I'm going for an IPO. First point. You should be very careful with this point. Sir, you are raising 1000 crore rupees. 1000 crore rupees. So you might be having some expense, underwriting commission, prospectus, printing costs, etc. Law is telling you, you cannot raise 1000 crores and say that, sir, 50 as my cost. 50 went. They are telling you the amount for general corporate purpose shall not exceed 25% of the amount being raised by the issuer. First point is simple. The total amount which you can spend for general corporate expense should be maximum of 25%. Okay, point number 1. This is my first point. Okay. Second. This is 2. This is 3. Order by which you have to read for better understanding. Sir, the amount raised for such objects where the issuer has not identified acquisition or investment target shall not exceed 25 of the amount being raised by the issuer. Okay, mark carefully, very important. Okay, how the amount raised for such object where the issuer has not identified acquisition or investment target shall not exceed 25% of the amount being raised. Okay, now let's go with the second point. Again, they are talking about 25%. So very easy. 25. So people, I'm raising 100 crores. 100 crores. So why am I raising 100 crores? Say for example, again, Swiggy example. I felt that I can raise 100 crores and I felt that one of the major people are ordering from my platform. Mostly something called as Sooraj Bisibalabad. My total population, total strength, most probable thing is people are looking for Bisibalabad only. So I felt that I'll raise fund and acquire this company itself. Acquire which company? Sooraj Bisibalabad. So Swiggy is going to raise funds with a proposal to acquire a company. Investment target. My question is, in the 100 crores, how much can I use for that? How much can I use? Any amount. Any amount can be used. Now, people, I know that Swiggy, I'm raising 100 crores to take one of the thing. It can be Sooraj Bisibalabad or Raghavi's dosai, or it can be Manoj tomato rice shopped. So I have not, I know I'm going to acquire, but the acquisition target is not been identified. So in my draft prospect, I'm saying I'm going for an acquisition, but who is the acquirer? I mean, who is the target? Is not been identified. So if you're not explaining who is the target, then make sure you not spend more than 25%. 25. That's the point. What are they saying? The amount raised for such object where the issuer has not identified acquisition investment target, then your total amount you cannot use more than 25%. Clear? People, A and 1 and 2 are clear? Okay. Okay. Now to our topic, second topic. Sir, I'm raising 100 crores. 100 crores. What is my acquisition is not identified. Not identified. So how much can I spend maximum? 25% of the cost. Okay. General corporate, how much I can spend? 25. 25. So put together, what should be my cost of these two? If you're not identified and you have a general corporate expense, put together, you cannot exceed more than 35%. So 25 plus 25 is equal to 35. 25 general corporate, 25 when you don't have identified your acquisition target. Then put together, they are telling you the amount for general corporate expense and such object where the issuer has not identified acquisition target, then shall not exceed how much? Shall not exceed 35 the total amount raised. People okay, 1, 2, 3 you are able to connect? Point 2 and 3. Okay. So people, I'm raising 1000 crores. 1000 crores for a merger. For a merger. So 1000 crores I'm doing. So Arivu is going for a merger. They're raising. I went for IPO and I said, I have heard that some academies are doing good. Sir, you're raising 1000 crores to acquire one of those academy. Okay. Which academy, sir? If you're specific on that academy, we don't have a problem. We don't have a problem. Sir, no, sir. You have not identified which academy we are going to hire. So Arivu is raising 1000 crores saying that we are going to acquire an academy. We don't know which academy. After raising funds, we will decide. Now, after raising the funds, you are going to decide. Law is telling you, you cannot use more than 250 crores when you have not identified which academy you are hiring. Acquiring. Vidyasri, first point is okay. Okay. Now, general corporate expense, how much I can spend? 25%. 25%. Now put together, I'm raising 1000 crores. I have not identified which academy. My general corporate expense is also there. So put together, how much I can spend? Technically, it is 250 crores on unidentified acquisition and 250 crores as what? General corporate expense. Correct? With this 250, 250. Can I do? Now law is telling you, no matter what, even if they are having 25%, 25%, put together, you cannot take more than 350 crores. 350 Danada. Pakka? Clarity undu? Good point. Okay. Yes, people clear. If you have identified what we are going to, you are anyway disclosing. No, I'm going to acquire Sooraj School of Law. Then we don't have. Based on that only, people will be investing. No, they're saying we are raising 100 crores to put 100 crores for acquiring Sooraj. Oh, Arivu, you are going to acquire Sooraj. We are ready to invest. Now, based on that, view only they are going to invest. No, we don't have a problem. No restriction. I can raise 1000 crores to fund a investment. I don't have a problem. But not identified, don't say that, sir, Arivu is going for a fundraising 1,000 crore rupees to acquire big academy. People are like investing. And you are saying, I acquired one street shop vendor and I morning doing tuition. You cannot do that as a funding now. So I was saying, if that be the case, 25 crores we can like sacrifice unidentified thing. Okay, done. So 5 mark into 3 questions we are done. Yes. Then they can ask you 3 marks, 2 questions. 3 marks, 2 questions. Same points. Understand, the same point. Scenario is same. People, 2 topics. 1, partnership firm or LLP. Okay. Second point, spinning of a division. First point is partnership firm or LLP. Second is spinning of a division. Same people. What I'm explaining what is the point. For second point, spinning of a division, requirements regarding previous point are to be complained. Meaning, complaints is same. Heading is different. Complaints is same. For spinning of a division also, you have to complain previous point. Correct? So I am to explain the points. Spinning of a division, or for a firm or LLP, you have to follow the previous point. Clear? Now people understand. Scenario is like this. 1. First scenario. Sir, I'm a LLP or a firm. Okay. Can I go for IPO? You can't go. Only company can go for IPO. So what I did, I converted into a company and going for IPO. Now, sir, last month I converted. Now I am going for IPO. Can I go for IPO? Because when you see your finances are as per Partnership Act or like a normal standard, not as per your accounting standards, you are not as per your Schedule 3. Or assume that there is a company which has 2 operations. Textile industry as well as steel segment. Now I felt that steel segment alone, I'm demerging, starting as a new company and going for IPO. So from the existing company, textile segment has been deleted, taken separately. Textile segment is going for IPO. This is called spinning off of a division. Spinning off of a division. Or first point, conversion of LLP or firm into company and then going for IPO. Scenarios are clear. Both will have to comply with the condition which I am going to explain. Easy. Introduction is good. Okay. Online introduction, good to go. We are telling you, yes sir, you can go, provided adequate disclosures in the financial statements are to be made in the format prescribed in the Companies Act. In your Companies Act, what is the format? Just tell them that, sir, we have converted or we have spun off. That should be given in there as a proper disclosure. Second point, your financial statements should be duly certified by a chartered accountant. Saying that disclosures are made in accordance with the provisions of Schedule 3. They are complied with Schedule 3. Accounting standards have been followed. The financial statements now reflect a true and fair view of firm's accounts. True and fair view. 3 points. I'm a partnership firm. I have converted into a company. I'm going for IPO. Or I'm an existing company having different segments. One of the segment alone, I'm going for IPO. Then that segment also should be having net worth, tangible assets, etc. No, you have to reclassify the financials. Similarly, there's a partnership firm which is converted into a company going for IPO. Please check whether the particular partnership firm which is converted also realign as per company law and just check previous 3 years whether they are matching all those net worth and net tangible conditions. Okay, with this three, okay? So existing company spun off, one division has been separated, or LLP or partnership converting into company, you have to follow the same condition. What you have studied, blah blah blah, net worth, net tangible, but make sure you realign, and realignment should be assessed by a practicing chartered accountant, your chartered accountant. Regarding the 3 points, disclosures are pakka, accounting standards are complied with, schedule 3 is been complied with, and the books of accounts now reflect a true and fair view. One more point if it's done now, next few pages you can delete. Okay. Okay, under control. Okay, tell me how are things going on? Okay, everyone invested into highlighters. Rich kids. For rainbow mode on every colors. Online students, you're trying highlighter version. Highlighter versions are working for you. You think the subject is complex? Okay, manageable. Same like CMSL. Not everyone would have enjoyed CMSL. People online, everyone enjoyed CMSL. No, CMS is not your cup of tea. Okay. You have studied all these points. I understood. Others? Okay. Now you are okay, or like you're feeling the subject is boring? CMS is a very interesting subject. It's actually good. When you do a self-study for CMSL, that's a challenge which you have. CMSL is not a paper which you can do a self-study. Bit complicated. Compile, I would say, if your college is good enough, they have given you some basic information, yes, you can do that. Probably. To an extent. CMSL takes time to understand certain provisions. Okay. Now people, offer for sale. So I expect, say for example, 60 marks, 15 marks will be sums. Remaining 45 marks, if possible, they can ask 10 marks from this chapter. And think like this, maybe 0 marks from this chapter also. Here we have 12 chapters, and they can ask you 5 mark coda, like say 45 marks or 40 marks. So 40 marks means they can ask you 8 solid questions, kind of. So 8 questions means they're going to skip 4 chapters. That can be even the important chapters. So understand, every chapter is having equal weightage. And they can even go for 6 chapters, provided they ask 6 chapters into 2 questions each. There are also probability. So don't skip any chapters. If you feel this chapter or some chapter is boring, at least know the outline. So you'll be like, okay, I'm not skipping the chapter. I know what is there. Okay. Now people, you know what is offer for sale?
Issue new shares, they will sell what they already have.
Who is selling?
Promoters.
Okay. Now people, there can be two scenarios to understand. Assume that previous holding of the company is like total 100 shares. Previous total shares, previous. Now new shares which are offered is 1000. Now, assume that there's a huge demand, but we have plans for issuing only 1,000. Now, in this 1,000, in this 100, 35 shares are held by Mukesh Ambani. He feels that, okay, I will also put some of my shares for sale. Assume that Mukesh Ambani is putting some of his shares. It's actually 1,000 shares which company is raising funds. 10 shares offered by Mukesh Ambani, which will only fund him. Company is putting 1,010 shares for sale. In public market, 1,010 rupees have been subscribed. 1,000 rupees goes to company. 10 rupees goes to the promoter. This kind of, along with the public issue, usually it happens along with the public issue, or it's like a normal offer for sale also. When the promoters are selling, means it's called transfer. Promoters selling through prospectus is called offer for sale. Meaning, when a public is concerned, he'll see what shares being offered by company. When promoter is seeing, he's getting money from public. Company is not getting any money from public also, because it's rerouted to promoters. That kind of transaction where promoters are offering their part of share to the public along or other than IPO is called offer for sale. We have extra conditions to be complied before an offer for sale. People, introduction to offer for sale is okay. Okay. Now, sir, people, what are the conditions for offer for sale? What are the conditions for offer for sale? All those conditions which I already said, already did. These are additional conditions. When you are going for only IPO, you comply with all those conditions, net worth, net tangible assets. You are going for IPO plus OFS. You have to comply those plus extra. So they can ask you additional conditions for offer for sale. If they ask for condition, they will not ask you condition. If there's condition, you have to write everything. So they can ask you what are the additional conditions which is required for offer for sale. Clear? Okay. First point. Sir, Mukesh Ambani, those shares Mukesh Ambani is offered, the 10 shares offered to Mukesh Ambani should be a fully paid share. Okay. Yes. Okay. People, sir, Mukesh Ambani should be holding the security for a minimum period of 1 year. Sellers for a period of at least 1 year prior to your draft offer document. You should have been holding. So just keep should be held by a seller at least 1 year prior. Need not be the filing of draft offer document. Just understand it should be a 1 year. Mukesh Ambani was holding the shares. Okay. Now. Okay. The 1 year shall be required to be completed at the time of filing draft offer document. That's already covered in point number 2. That's why I'm not taking point number last 5th point. Now, for example, company is going for an IPO today. IPO with offer for sale today. Mukesh Ambani got equity shares 5 months back only. Can he sell those shares? No. But they're telling you. Say for example, Mukesh Ambani got that 5 shares. That shares 5 months back, pursuant to a conversion. Deposit receipt. ADR, GDR. Compulsory convertible securities. Those kind of thing. Then assume that, sir, Mukesh Ambani got their convertible debentures 5 years back. Converted last 5 months. Now total he's holding the security for more than 5.5 months. He's entitled. They said you should be holding the shares for 1 year. Equity shares for 1 year. But equity shares should, the underlying security is also been held. So for example, for converting, so I'm already holding debentures for a period of 8 months. It got converted. Now it's 5 months. Now we're going for offer for sale. 100% allowed, because totally the security as a share or its previous version of convertible security are put together by the held by the promoter for a period of 1 year. He's eligible. People, good point. Okay, good. Then, okay. If that is conversion, no, conversion should be completed prior to filing offer document. You're talking about, sir, yes sir, we are having convertible. Okay, da. At the time you should be converted. Before the filing of draft offer document prospectus, the conversion should have happened. Then only we can consider that also for your, it can be 11 months and 29 days of debenture, 1 day of equity, you can still go. But a conversion should have happened. Done? No. Non-applicability. This 1 year, mandatory 1 year requirement for offer for sale shall not be applicable. Shall not be applicable if the offer for sale is by a government company in infrastructure sector. The period of 1 year shall not be applicable for Mukesh Ambani if he is a promoter of a government company engaged in infrastructure sector. Okay. Now, second scenario. How did you get that shares? Assume that, second scenario, company A merged into company B. So now there's a new company formed as company B. The company B is going for IPO. When company A is merged into company B, shareholders will be given new shares in company B. Now company B is going for IPO. Can the shareholders of company B go for offer for sale? 100% yes, provided they are holding shares for minimum period of 1 year in company A. So company A is merged into company B. All the shareholders of A will be transferred to company B. Now the company B is going for IPO. Along with IPO, there's an offer for sale. All those previous shareholders, meaning current shareholders in B, is actually what? Previous shareholders in A. It's okay for those shareholders to go for an offer for sale, provided the previous company, meaning A company, you are holding shares for a minimum period of 1 year. So 1 year, that can be. Equity shares offered for sale were acquired pursuant to a scheme of merger. Scheme. Here the scheme is called merger. Then the investor capital, meaning the capital which you are having is more than 1 year prior to that scheme. Meaning you are already a shareholder in company A and you are already holding shares more than 1 year. Then at the time of company B going for IPO, you being a shareholder in company B, already being a shareholder in A, can also do that particular offer for sale, provided in company A, you are already holding shares for minimum period of 1 year. Welcome to interpretations. Good. People, good. Okay. Now, I'm Mukesh Ambani. I was having 10 shares. Company issued bonus shares 1:1. Now I'll be having 20 shares. Can I offer this 20 shares also? 10 shares is my share. 10 shares are received as free of cost. Can I offer for sale these 20 shares also? Law is telling you, if the equity shares are received, equity shares which you are offering has come to you using bonus, then it's okay. The share should be held for minimum period of 1 year. I agree. Provided so the shares are received to you free of cost also, that also can be issued for offer for sale, provided this bonus is issued by free reserves, securities premium or CRR as per the law. We know no bonus share sources are free reserves, securities premium, CRR, and not from revaluation or unrealized profits. So you can do this provided you got that bonus person to as per company law and not as per this thing. If the bonus shares are issued to you based on free reserves, securities premium, you are free to sell that also as offer for sale. But the shares are given to you from a reserve called as revaluation reserve or unrealized profits. Then you don't have a choice to get that. You don't have a choice to offer that resulting bonus shares to offer for sale. Clear? Online? Good. Last point we'll break. One more point. First point, I'm a promoter of a government company. No, you need not remember. See, regulation number is your call. If you want your answer to be super cool, after finishing your provisions, you think that you have time, do that. I'm a person who don't write. I never see. I have written these papers and like say for example, your CMSL, these papers, and I score really good marks, like almost 70 range. I never tried section numbers and all. Never. ECAPL 77. Never tried a section number. Okay. My provisions are strong, not the section numbers. Section number anyone can memorize now. Provisions. You get the provisions right, you're on track. They will not ask you, tell me what is regulation 16. They can ask you what is board composition as per regulation 16. Again, board composition is something which you know. Fresh book, enjoying, huh? Okay. People, okay, last point. Then we will take a break. Last point. Sir, there is a additional conditions for QAB. Like IPO, I mean, your offer for sale is done through QAB. But people understand it's not an important word that you have to focus on QAB. It's like offer for sale, you have to keep this in mind. QAB is one route, normal route to QAB route. When you're doing an offer for sale through QAB route or offer for sale, these are some other points which you have to keep in mind. Offer for sale. First 2 points are actually challenging. Third point is nowhere connected, but you have to remember. Okay. Okay, let's see. Shares offered for sale to the public by promoters holding individual or person acting with concert more than 20% of pre-issue shareholding of the issuer based on fully diluted version shall not exceed 50% of the pre-issue holding of on fully diluted share basis. Shares offered to public by the public shareholders, shares by the shareholders holding individual power less than 20%. Shall not exceed 10%. Easy point? No. It's a challenging point. People. I'm going for offer for sale. How much is, so people understand this question, very important, they can ask you. It's all about QIB route for offer for sale. Correct? Now people understand. Total shares of Reliance is 1000. Now they're talking about the promoter or existing selling shareholder. We call it as promoter, existing shareholder, or a selling shareholder. New shares are, we are not going to talk about those new shares. We're talking about existing proportion. So current scenario is this thing. We are proposing something. I don't care. We are proposing 1000. Okay. With 1000, we can offer what? Offer for sale. Extra shares can be offered. Assume that Mukesh Ambani. We are talking about Mukesh Ambani. But we are talking about something called in concert also. Meaning Nita Ambani also. Okay. Their team is having previous holding, they are having 280 shares. What percent they are having? More than 20%. So out of total 1000 of previous holding, Mukesh Ambani and person acting in concern, Nita Ambani, put together is holding 280 shares. Now, in your offer for sale, IPO plus offer for sale, how much from their 280 shares they can offer for sale? I can offer for sale only 140 shares. I can offer for sale only 140 shares. This is point number 1. So, pre-issue holding of Mukesh Ambani, promoter or acting in concert people, team, is more than 20% of the total pre-issue holding. I can offer half of my holding. 50% of my holding can be put for sale. People clear? First point, take your own time to analyze. First point. Okay. Now try to read this. Shares offered for sale to the public by shareholders, meaning promoters, selling shareholders, individually or collectively, they are holding how much? 20%, more than 20% of pre-issue holding of the issuer, fully diluted basis, blah, blah, blah. Then you cannot offer more than 50%. You shall not offer more than 50% of the pre-issue holding. Easy point. Online, pakka. Now, try to decode second point. Read carefully. I'll give you a scenario. You have to tell. Expression says. People who have attended my CMS class, silent. Others, read. Same point. What? Less than 20, 10%. Okay. Chill. Last question. Okay. Manoj, question is yours. Easy. So, Mukesh Ambani and Nita Ambani are having 150 shares, which is less than 20%. How much shares they can offer? Tell me the number. How much shares? Easy, no? 15. How is 15? Just because I gave a build up, you're saying 15? Why 15? How much is that? 100 you can offer. Yes, they never used. They never less than 20%. Then shall not exceed 10% of issuer. They never used 10% of my holding. Previously they said 50% of my holding. Here they said 10% of the issuer. Meaning I can offer up to 100 also. They never said 50%, 10% of mine, 10% of total. So I can offer 100 shares. Pakka, people pakka online. Good clarity. Yes. Good. Now, first condition again. More than 20% story, no? Then, remaining chapter, remaining topic, we have something called as lock-in period. The lock-in condition shall be applicable. Some random topic which I am not explaining. You will understand, not explain now. They're telling, if you have more than 20%, then lock-in story still applies. Lock-in story still applies. That's all. 3 points to understand. A and B are our points. Third point is like, okay, average. I'm not explaining third point.
Show the example.
Okay. Online, all good. Okay, super. Interesting subject. Actually, theoretic. The third point, I didn't explain. Third point, mug up for the time being. We'll have that point solidly coming. Now, for the time being, mugged up. We have lock-in period conditions. That time you'll understand. Now, no. It's okay. Chill. Yes, so we'll take a break now. 25 minutes, come back. Come back at 9:20, da. Online, all good? Breakfast is sorted. How many idli people? Idli peoples? Idli? Idli, okay. Cool. No idli people? Dosa people are? Okay. So, you are basically from Chennai, you are from? Trichy, okay. Trichy, Chennai or Bangalore? And the sambar pudikkum? Sambar wise. Enke kara adhigo? Okay. 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 People, let's get back to eligibility conditions for FPO. I can skip the topic, no? %, skip. You already know this. Yes. Same points. Except one point. E point. Regarding convertible security. Point is missing. Remaining A, B, C, D points are same. Good. Except E point. Remaining points are here. Cool. Same points. General conditions. Same point. Same point. Against stock exchange dematerialization. Fully paid for forfeiture. Firm arrangement finance for 75% of stated means of finance. General corporate expense 25%. General corporate plus put together is 35. Same points. Good. Issue of warrants. I have already covered what is issue of warrants. Yesterday itself. Yes. Remember the points? Issue of warrants. Now let's go with the remaining part. Now page number 250. We came to first. Almost half. Yes, almost half. Next half is complicated. Half. Okay. People. Some points there are amendments, but not a complicated amendment. I'll discuss those amendments later. You might have to change some wordings here and there. from this topic. So that I'll do amendments towards the end, so that it'll be okay. You just replace that. If not, if you're teaching now, that will be some complicated, some online change. So I'm teaching from an old thing. Some point you have to change towards the end. Okay. First point. Promoters of the issuer shall hold at least 20% of the post-issue capital. Okay. Promoters contribution. Why promoters contribution important? Captain of the ship. There are some companies which people will see if the promoter is so famous. People to invest based on promoters. Remember, the point which I am going to explain will not happen if the company is not having a promoter. Then ignore this provision. The company is having a promoter, you have this provision. The company is not having a promoter, you don't have a point. Can a company be without promoter? Yes, 100% you can be without promoter. If they started, then now someone else is taken place. Something happened. Now there's a company is not having an identifiable promoter, you don't need to worry about this condition. The company is having a promoter. Who is a promoter? Someone is identified in the prospectus. In the prospectus promoter column, you have mentioned Mr. A and his team. Now this provision will attract. Okay. Promoters of the issuer shall hold at least 20% of the post-issue capital. Okay. Now my first question. This part, this ABC is one confusing topic which you will encounter. One confusing topic. It's not. I don't say it's an important topic. Confusing. Okay. People. Promoter shall hold at least 20% of post-issue capital. Promoter should be holding a minimum 20%. So what if promoters are not in a position to contribute 20%? It's a violation. Law says no problem. Someone can offer you help. However, in case of post shareholding is less than 20%, then people constantly very important. AAF, venture capital investors, scheduled bank, public finance institution, insurance companies, and the following people which I am going to explain. The following people. And the following people. There are set of one more set which you have to be, which is complex. They may contribute. I mean, to explain what is the second point. They may contribute to the meeting the shortfall, but maximum 10%. Meaning, if the promoter is okay for 12%, 8% can be brought in by these people. Promoter is okay for 8%, 12% can never be contributed by these people, because that support cannot be more than 10%. So 20% is something which the promoter should be having, but support people, those people who are there for support, those people can contribute the shortfall, but to a maximum of may contribute meet the shortfall for maximum of 10%. 10% without being identified as promoter, meaning you don't need to call them promoter, but they can still help you with the shortfall. Who are the people who can help them? Tell me, first person is AF, second point is venture capitalist, third point is scheduled bank, fourth point is public finance institution, fifth is insurance company. Very 5 easy points. Sixth point is complicated. Sixth point, which is that marked point. Any non-individual public shareholder holding at least 5% of the post-issue capital, or any entity, individual or non-individual, entity forming part of promoter group other than promoters. Sir, who can help? Who are the remaining people who can help? It can be an individual or building. Correct? Okay. To support the promoters, other than those entities stated, there can be these set of people. Who are these set of people? First word is regarding First point is regarding, read the first point is regarding any non-individual public shareholder holding at least 5% of post issue capital, meaning non-individual. This building, say for example it's a bank. If it's not coming under not coming as a any non-individual public shareholder, meaning this building purchases some shares as a public shareholder. Can I say that it's a building public shareholder? They can also help. To help the promoter, there is a building which is from the public also. They can also say, oh, promoter, you are having only 15%. I can also help, provided he is having. Okay, wait. First point, any non-individual public shareholder, meaning a building shareholder holding at least 5% also can help. Or a building or individual forming part of promoter group also can help. Meaning, to help the promoter. Sir, help the promoter. Promoter help can be extended by Mr. A or this building from promoter group. Individual or building from a promoter group, or a building from a public group, provided he is having minimum of 5%. So if the promoter is having only 12, 8% can be contributed by Nida Ambani or Reliance Foundation or ABC Bank, which is public. ABC individual cannot contribute. ABC Bank can contribute, provided the ABC Bank is having minimum of 5%. Meaning, if the promoter is having 15 only, non-individual can be any another company also, not related to the promoter. So here, if the scenario was 15 promoters, then 5 can be contributed by that other public body corporate. Okay. So clear. So let me summarize. A promoter should be having how much? 20% of post issue capital. Remember the word. But help can be given by others up to 10%. Who can help? A bank, public finance institution, insurance company, AAF, or foreign venture capital. Correct? Or even promoter group, individual, or building. Correct? Or even public category building, provided the building is having 5%. Clear? That can also help the promoter to meet the shortfall. Clear? You have kind of amendment, but understand this is the structure. Online Pakka? Okay. Now, Swati, all good? No. Okay. People, I'll ask you a question. That makes this topic, the question, if you are able to solve, this question is okay, this next topic is okay. Otherwise, not okay. Okay, let's assume I am a promoter of Arivu. I'm a promoter of Arivu. And Arivu is going for a public issue. Public issue of 1,000 shares. Okay. How many shares I should buy without the help? Arivu is going for 1,000 shares. How many shares I should buy?
20%.
Okay. Now my question is, just analyze and tell me, can I say that I'm not going to buy any shares? Good. I don't want an explanation. Good. I think you got the explanation. Can I say that I don't want to buy any shares? With compliance of law. Why do you think you should buy 20%? Why do you think you need not buy? Why?
That's not compulsory.
Well, appam tappu. Okay. Okay. I'll tell you the answer. People understand. Arivu is going for IPO. Promoter should have 20% of post-issue capital. Assume company is going for IPO now. Previously, company was having 3,000 shares. Pre-IPO. When they start, they have 3,000. Now, adile 1,500 is held by me. Now, total post-issue capital is what? 4,000. How much percent I am having? 1,500 out of 4,000. What I am having is more than 20%. You need not contribute, no. So law never said you have to buy 20 shares. They said outcome X plus Y should be the XY. You should be having 20%. So it's not mandatory that promoter should be buying. Promoter should be holding. People ask, Pakka, you got the story? Yes. You need not buy. You should be holding. So say for example, my previous holding was 0. Now I have to buy. In such a manner that, so previous 3,000 I'm having only 0 shares. Now how much I should buy? 60, 20% of what? 4,000. Because previously it was 0. Out of 400 I should be having yeah. See numbers. So you should help me da. So I should have 20%. Good. Now that clarity is sorted, you have one complex point. This is called minimum promoter's contribution. People, basics done. Then only we can proceed further. Okay. People, very carefully analyze. Promoter shall contribute 20%. Correct? Either by way of equity shares, superior voting rates, SR equity shares, or even convertible securities. How can they contribute? How can they contribute? I'm not talking about they have to contribute. They have to hold. Correct. So I have to hold up to 20%. So if I'm not holding, what I have to do? Contribute. Purchase. So I have to subscribe. They say you have to subscribe. No, I'm not saying you have to subscribe. It need not be subscription. If you're already good enough, you need not subscribe. But if not, you have to match the 20% using equity, superior voting equity, or even convertible security. Pakka? First point. Sir, say for example, you have to contribute 20%. I'm having 10 equity. And I know the conversion ratio is for one debenture, I'll get 2 equity shares. Conversion ratio is 1 share, I'll get 2 equity shares. Now assume that I'm having 10 equity shares and 5. I have 10 equity shares and 5 debentures. I have already completed the conditions. I have 10 equity, 5 the convertible debenture will be converted into 10, post issue will be 20 and complete. Correct? Now, sir, now people concentrate. If the price of equity shares allotted person to conversion is not predetermined, I don't know what is the conversion ratio, then how will I do? Then the promoter shall contribute only by subscription to the converted security and shall undertake in writing to subscribe. Meaning, we don't know how much you are going to take. Give me a promise, undertaking your promise. Say that I will take 20%. So we are not sure this much. So when you convert, I don't know what ratio. Law is telling you it's okay. You buy in such a, you give a undertaking, meaning promise, say that no matter what, I'll be having 20% after the computation is done. Kind of okay. Manageable. Okay, selective reading, very important but complex. So if you're not able to identify what is conversion, what you can do? I promise to do that on conversion. How will I know that? See, 20,000 debentures are converted into equity. Say for example, there is an option where 20,000 debentures issued may be at a premium or redemption at premium. Now redemption premium may be changing. So 20,000 shares will be redeemed at a premium of 10,000. So 30,000 convert into shares. That conversion we are not yet to confirm. You just give a declaration when you convert. Okay, manageable. That's the best way I can explain. People okay? Now, people, I have convertible securities. Okay, sir. Convertible security, which are convertible on a different dates. Different rates. Now what I'll do as a good promoter, what I can do is I can plan like this. Whatever conversion price is less, I'll take that. Correct? Say for example, one conversion happens, I have to pay 25 rupees. One conversion I have to pay 15 rupees. What I'll do, I'll instead of waiting for 25 rupees, I'll wait for 15 rupees and do the conversion, get the 20% promoter contribution satisfied. So that I have to contribute 20%. That 20% can be met for different converter security. I have class A debentures, class B debentures. Class A price comes as 25, class B comes to 15. So in order to meet the number, what I'll do? Class B I'll excise. Optional convertible. What I'll do? Excise class B. So that I need to pay a very lesser price. Loss I don't do. For that, then you have to contribute shall be on weighted average price out of conversion. Meaning you compute on both how many shares are 25 conversion, how many are 10 conversion, do a weighted average, arrive at a price which will be some average price, at least pay that average price. When you're having a differential price, as a promoter you don't have a choice to take the lowest price. Highest price you take, but lowest price means not fair. So at least in that scenario, when you have a conversion happening in different ratios, take a weighted average and based on that price, compute the number of shares which you have to do acquire to meet the statutory requirement of 20%. Okay, kind of okay. I can ask you a kind of okay only. Okay, manageable. It takes time. People, okay. Not an exam question. I mean, exam is like a practical question. Understand you have to be theoretical. So if your rates are prefixed, no problem. Rates are not prefixed, just give an undertaking. Sir, I know the rates, but it's happening as a different time slot. Then take a weighted average price and convert it into 20%. Okay. Now people, third scenario. Sir, I'm going for IPO. Of what? Only debt without prior public issue of equity. Meaning you're going for what? Issue and listing of debt securities without going for equity listing. Then law is telling you, I don't know, then you should bring at least 20% of the project cost in form of equity shares. You have to bring additional equity worth of 20%, subject to contribute at least 20% of issue size from their own funds. Meaning, you have to buy 20% and bring 20% of equity. The company is going for debt listing. Then, debt listing, debt till 20 you have to buy. I'm going for debt equity. I mean, only debt without going for IPO of equity. Straight are going for debt listing. You have to take 20% of debt as well as bring 20% in the form of equity. You have to bring in additional 20% in the form of equity shares as well as 20% in form of subscription to debt. Like rights issue. Company is doing a rights issue and you will contribute 20% in the form of equity. The company is going for debt, IP of debt, not equity. So no equity, only equity is with the
issue says of the debt to be referring in the form of equity.
no subject to. Shall bring in a contribution at least 20% of the project cost in the form of equity shares, comma.
They have to bring it. Second one is like issues, they are issuing debt to user.
Correct.
So like for debt they are given, I think.
No. Convertible debt only, no. That will be converted to equity. That equity shares you have to take 20%. So you're bringing 40%. Like 20% in the form of pure equity, 20% in the form of subscribing to that convertible security. You have to subscribe to both. You have to bring 20% as a, say, assume like this. You are a company, you are going for IPO of what? Debenture. You are a promoter. Again, you have to bring side 20% extra equity as well as this component 20% also you have to buy. You have to buy twice. One, you have to bring us the equity component and purchase to 20% of the issue size. Okay. So law gives like this. In case of an IPO of a convertible debt without a prior debt, public issue of equity, the promoter shall bring in at least 20% of the project cost in 20%, subject to contributing 20% of issue size from their own funds in the form of equity shares. Now, people, I would interpret in a different manner. Say, for example, it's okay. Way more confusing. It's okay. When you have a doubt in interpreting law, when it comes to your real life practice, you can ask me. Otherwise, no. Still, that's an extra kind of complication. Now, for the purpose of this topic, how can I contribute? A promoter can contribute. Promoter should contribute. How much? 20% of post issue. 10% can be adjusted. Those people, we know. Promoter can contribute 20% in the form of equity, SR equity, convertible debt. Now 3 points. Sir, if the conversion formula is not known, then you give an undertaking that I'll take. Correct? Yeah? Conversion price is not known, you give an undertaking. Sir, conversion I know, conversion happening in different dates. Then the price will be determined based on weighted average. Third, some company I'm going for convertible debt without a prior equity. Promoter should bring 20% as equity and should be agreeing to take 20% of the. So we are here use equity as project cost. Here 20% of the issue size. Okay, good to go. Say for example your pre-issue equity shares are 10, but I should be matching what? 20%. Assume that there is a conversion. I have already purchased debentures, class A debentures, ratio 1 debenture is equal to 3 equity. Class B 1 debenture is equal to 2 equity. Okay. Now I have equal contribution. Debenture also 10,000 rupees. This is also 10,000 rupees. Now I have to match the equivalent number of equity shares, 10 more. I'll try to convert this because with 10,000 I will match 3 shares. If I go with this, I will be able to match only 2. Maybe I will need more number of shares to be again purchased to match the requirement. So law says don't give a option where you can get it easily. So there's a conversion happening at a different rate, different place, different time. Do one thing, take an average. That is, one share will get 2.5 equity only. Pay for that. Remaining you have to fund using your funds. Don't take conversion as an option to fund. If it's a different rate, different thing. Take an average and find the price at which your conversions happen.
So if only debt, if only they are going for the debt, then only C will be up.
Only debt without equity. I'm a company which is complying issue and listing of debt security regulation, meaning not done ICDR, not comply with this chapter. I'm straight away going for debt listing. So now debt is coming to public domain. How will people trust this company? So promoter saying, don't worry. In the equity component, I'm bringing 20%. Debt also I will take 20. Now you trust me? Trust the company? How we trust you, sir? The trust issue. So what if he contribute only 20? Debt means debt is or no? Debt means he can also, it's debt, he is also a debt holder. Now I say no. You tell them you are the real owner. You are interested in the company. How? By investing more equity as well as saying that I'm okay to take 20% of debt capital. Pakka? Clarity. Very complex point. It's 40%. Raghu, okay. Raghu, what is the status? Now you understood? Okay. Company is having 100 equity. I'm going for 100 debentures. So these equity are unlisted. This is public issue, meaning parallel listing will happen. Public issue and listing. So to enhance the trust, they're telling you, the company is going for debt without going for equity. Promoter should tell that, bro, 20% of the equity is mine. I am the real owner. Plus, I'm okay to take 20% of this debt also. So you're ready to take 20% of debt as well as you're bringing 20% of equity. Where you're having 20% of equity. People. Okay.
So this is for compulsory convertible or
compulsory convertible.
optionally convertible?
Optional convertible is like proper debt listing structure. That's a very different. You don't have this kind of complications. This is convertible in debt. Okay, so you should bring 20% in the form of equity as well as subject to contributing 20% in the form of issue, like from contributing that thing. So people, my other interpretation says like this. Even though it's like kind of 40%, My other interpreter says it's okay if you're matching 20%. Say for example, either you bring 20% as equity or take 20% now. It's saying promoter shall bring in contribution of at least 20% of the project cost. Say for 3 people. That's again I'm talking about the project cost. Assume that again I will go with the project. My project cost is total 1000 rupees. I'm going with equity and debt. So equity, it's not like a public issue. Debt is a public issue. Now they are telling you so that's the project cost how much? 1000 split into 2. How much? Say for example 200 equity and 200 debenture which are going for public issue. So again people confusing only, but for you to, if you are not getting that point, ignore. Not getting this point, ignore. My interpretation, it can be, we don't have that these kind of scenarios in the real life. That's the problem. Bookish. Assume that my IPO project size is 1000. So project is 1000. 800 in the form of debt listing. 200 I'm raising from other sources. This 200 20% should be brought by promoter. Now if I am bringing 200, how much is that? Okay. I'll bring that amount. So project cost is bringing. Now people, total project is 1000. Okay, 1000 rupees. How much I'm having? Only 40 rupees, no? Only 40 rupees. What is 1000 into 20%? 200. It's okay, you buy 160. You match requirement of 20%. So they are telling you the project is having debt plus others. Then others you bring 20%. Now tally it. Meaning 800 cross of debt listing, 200 other sources, you bring 20% of that. Meaning out of 200, 40 is brought in by promoter, 160 is promoted by some other private people. Now 800 is they are going for 800 of debt listing. Now total 1000 rupees. How much is held by promoters? What percentage? Out of 1000, only 40 shares I am having. 40 rupees. What is that percentage? 4%. 1040 is 4%. Correct. 4%. So I have to buy how much? 16% of total. Meaning I have to buy debentures in a manner that I'll match total of 20. That's how I interpret it. So again complex, you know. So again people, reality again. Assume that we are having 500 debenture for public issue. But my project cost is 700 rupees. How am I funding? 500 from debentures, 200 from other sources like private placement. So private placement is 200. Debenture issue is 500. Private placement 200. In that segment, at least 20% should be contributed by promoter. So promoter should contribute how much? Out of 200, promoters contribute how much? 40. Clear? Out of 200, promoters contributing 40. Now, after this public issue, how much will be the total cost of the project? 700. 700, how much is promoter holding? Only 40. 40 is what percentage? Some comparatively less. But we should have how much? 20%. So buy that much amount of debentures possible so that you meet the quality of. So by that means by X amount of debentures in such a manner that total project cost is having 20% contributed by promoters.
We see, we should have 20%.
You bring say for example the project cost. Assume that 200 is brought in by promoters. Now 200 is bought by promoters. Total cost is what? 700. I need not buy any debentures because out of 700, 200 is held by whom? Promoter. You're able to interpret this? Only you?
Sir, it can be reverse also. If he has
No.
equity
No.
also.
They said first priority should be equity, subject to 100. So equity, if you're not giving, at least bring 20% in the equity.
Sir, if he already has 20%.
No, they use the word project cost. Project cost meaning project upcoming. Online. Second interpretation is okay for you. Exam, don't worry, just think about the points. Okay, that's right. Now you understand the points are not easy. Now you understand why this point is not given in executive syllabus. 20% there. This point was not in your executive syllabus because that could have been one reason for you not clearing this executive. Could be that triggering event. People okay, comfortable? Interpretation, fine. Okay. Online, please revisit the recording and make sure it's done. Which is second part of explanation is Paka. Best way to understand. Because the law is using the word subject to. Okay. Sir, where points? One more point. No. Okay. Sir, when should promoter Anna bring in this money? Sir, before other people are coming in. Promoter's contribution including premium at least 1 day prior to the date of opening of issue and shall be kept in a escrow account in a bank. This amount shall be given to the issuer along with the other amount. So issuer will open a bank account where you are putting your application money. Correct? Before the application money starting date, promoter should have brought in his money. After receipt of other people's money, bank will release the total amount given by promoters as well as public to the issuer. Clear? Now, sir, what if he's already having 20%? Where the promoter contribution has already been brought in. Meaning, so he's already brought in the money. Meaning, previously he has been subscribed and he is already having 20%. Then this was the same in cash flow. Just tell me on the cash flow that the amount from the promoters are already in picture. Promoters already contributed. Make sure you give a picture representing that in the cash flow. Yes, sir, I have already received this amount. Okay. Now, sir, when I computed 20% which promoter should bring in more than 100 rupees. And IPO is for partly paid up shares. Promoter shall bring in 100 crore rupees before the opening of issue, remaining amount on a pro rata basis before the close. Okay, only this. Other part you don't need. Post issue is based on conversion, assume all stock option. We know because everything computerly you will compute. All the conversion should be kept in mind before you compute the actual amount. So I don't want point number A and B there. But the second, however, paragraph is very important. Think like this. People. We are going for X amount. when I computed the X amount on promoter's contribution, the amount which promoter has to bring in is 1,300. 100 crores. 100 crores. So 130 crores he should bring. Now he should bring 130 crores. Assume that the company is saying people don't pay the entire amount now, make calls, application money 2.5 rupees, first call, final call, etc. Then again, if the amount he is contribute is 130 crores, you have to minimum bring 100 crores today. Remaining 30 crores you can bring in based on whenever the company is making call, final call, first call, whenever they are making, parallel you bring, proportional basis you bring. So the promoter's contribution, if the amount is more than 100 crores, if it's 99 crores, you have to bring the 99 crores in day one. The amount is more than 150 crores. You bring minimum of 100 crores one day prior to the date of opening of public issue. Remaining 50 crores can be brought in whenever the company is making a call. That time you inform, sir, we are making the final call. You also do bring some proportion. We are making a final. We have 2 installments. Total 150 crores. You have produced 100 crores. Now we have only 2 installments. We are making the first call. You do one thing, pay 25 crores now itself. Proportion basis. Company is having only 2 calls. Promoter has to bring 50 crore more rupees. 25 now, 25 later. Clear? Clarity?
Should be given first.
Minimum amount of 100 crores should be made. So the amount is 85 crores. 85 you have to bring day one. Okay. Manageable. Only you. Welcome back to law. Okay. After the break, you are seeing a good law, decent amount of law. That's where people are reluctant to this paper. What is the reason for that provision? Because the reason you should ask them, because they're telling you 100 crores, that amount at least you bring. If it's more than, say, for 1,000 crores or all, what if the promoter is not in a position to bring in that amount? At least for IPO, you should be ready with the 100 crores. The 100 crores amount set by the law. Okay.
Sir, what if the issue is only less than?
Then you bring the full amount. If you issues for 80 crores, your contribution 16 crores. Bring the extra 16 crores. You don't have a choice of splitting and all. Online, okay. Konjam challenging paper now. No. Okay. Give the comment. Put. Okay. Okay. 2 points. Okay. Sir, pre-issue, say for example, I should bring 20%. I should be having 20%. Assume that previously I'm having 18%. How much more? 2 more I have to bring. Oh, super, sir. Thank you. But law is telling you that 18% pre-issue you are telling, no, that should not have the following. Your pre-issue or like your existing holding is ineligible, meaning you have to fresh start 20 again. Why? If the following shares are held, you are saying that, so I have to have 20%. I'm already having 20%, sir. That 20% I'm having should be 20% fresh for you, meaning that you have paid the price for that thing. If that be the case, only we will compute that under 20%. Otherwise, the following are not counted. In your exam, they'll ask you direct question. What are the securities which is ineligible for the promoter to keep as promoter's contribution? Okay. People, assume that I have to bring total of 300 shares. Okay. So I'm already having 200 shares. How many more I have to buy? 100. That 100 is sorted because you're going to buy in public issue. In the 200, assume that in the 200, okay, 200 is safe. I have to buy only 100. In the 200, 25 shares of yours because of your Anand Ambani's marriage, you kept the 25 shares with Muthoot. Now, even though you are saying that 25 shares are mine only, there's some other authority which is having a control. Who? Muthoot. So law is saying, no, we will not allow that for considering. You might have to take that 25 again in public issue. Ineligible. You are getting the story? Point number D, okay, people online. Okay. Now, people. Point number 1, I mean A, B, C. Complicated, but let's simplify. There are some specified securities acquired in the last 3 years by the following people. It's for, sir, how did you receive that shares? So simplified. Sir, I am already having 200 now. That 200 30 shares I received because of consideration other than cash. I gave on TV and I got shares. Or through revaluation of assets, I got that shares. Or bonus shares issued received based on the revaluation. That 30 shares should not be counted for your calculation. That 30 extra you have to bring in using IPO. That shares are acquired in the last 3 years pursuant to consideration other than cash, revaluation of asset, or bonus issue received out of revaluation. That is ineligible. You have to buy more shares. These shares will not be counted as, sir, exempted category, sir, I am already having 200. These are not under the 200 category. Or, so second category they talk about, sir, there are some specific securities acquired by promoters or the helpers, blah blah blah, helpers. I'm not going to explain. We know the help. Promoters in the preceding 1 year at a price lower than that is given to other people. Meaning, you got a discounted price last 1 year. Safe. So you know that I have to buy 100 shares at 100 rupees. What you did? You asked the company to give a private placement and received 100 shares at 15 rupees. So that now number of shares I'm okay, tallied. Law is telling it will not work like that. If you have received that at a discounted price. Discounted price means a price which is lesser than that is being offered in public issue. That price means that is also not considered under counting the 200 limit. 200. I know I have to buy post issue. I have to buy 200 rupees, 200 shares. So I have to have 200 shares. What is it? Hey, Reliance, do one thing. You issue some shares to me at 25 rupees. I'll buy all the shares. I'm having how much? I paid 25 rupees and I became 1000 shareholder. 1000 shares I'm having. If not, I have to pay 200 into 200. I have paid 1025 rupees. I say, I need not buy any shares in IPO because I'm already having more shares. The law will ask you, how did you get that shares? I said, I got it at a discounted price. Sir, number than sir mukhyo. Law said, no, it's not the number. Price is also important. You shouldn't have received the shares by putting powder in the eyes of the people and say, sir, I got shares. That to avoid that, they said, no. If you have received that shares prior also, we don't have a problem. But that should be at a fair price. Discounted price, we will not allow that for considering into holding. Okay. One more point. Okay. Okay, Ada.
I thought if they get information before, that would be inside information.
Oh. Inside information, they should be part of inside information. No, I'm a promoter. I already know what is the planning. No.
Still, if it is going to be
I know it's inside information. Okay. You buy at a fair price. We don't have a problem. We are not forcing you to buy in public market. Okay. We don't have a choice. But that is a discounted price. That's a problem. Now people, can I say that B point and C point is same? Preceding 1 year, price lower than issued to public. Now people, what I'll give as an example. Here, 1 year prior, you are receiving shares pursuant to a private placement. Example. Correct? You received a shares under private placement at a discounted price. Now here, you are getting those shares because of a conversion. Now people, think like this. People, scenario number C is very complex. People, there was a LLP. LLP is getting converted to company. Now, LLP's partners will be promoters of the company. Management of LLP is done by partners. Control of the company will be held by promoters. Now, what I'll do? I'm doing a conversion. During the conversion, what I'll do? I'll give shares to people. So, LLP people will be receiving shares in the new company. Now, that time when you converted your LLP into company, you received a share at discount. You are a promoter. How are you promoter? You are a LLP partner converted into a company. Now, LLP partner is the promoter of the company. At that time, the company issued. At the time of acquisition, the company issued shares to promoter / partner at a discounted price. Now you are a promoter in the company. Company is going for IPO. You have to contribute this much. But you are saying I am already having this much shares. How did you get the shares? At a discounted price. That should be excluded. You have to freshly buy new shares. Clear? But that has rules. So bonus at a discount, private placement at a discount, conversion timely you got a price at a discount. Both are not allowed. To tell all those things, they have explained in such manner.
While conversion is taken to the fair price?
No problem. No problem. Conversion I got at 100 rupees per share. Public issue is also 100 rupees per share. I'm already having 20%. You don't have to buy anything. It's not moving fast track, da. Ultra slow motion. But I think these chapters need that slow motion. If not, there's no point of teaching. I can do fast track with other chapters. There are chapters like easy going chapters. These chapters, if I go fast, I'll go. What topic? Which topic? Online. Good points. No comments. What the? Good. Good. Okay. I would have given that as simplified examples in executive. Now you need to be a bit serious. Like your executive will be like, okay, these shares are not allowed. Reason should be done properly in a profession. Okay. People, generally, this provision shall not apply. Clause B. What is clause B? Da? Acquired by promoters at a price lesser than the public issue price. That clause B shall not apply when there's some word called agree. Okay, people. I got shares at 80 rupees prior 1 year. Promoter, private placement. This time public issue is 100 rupees. Those shares are not entitled. That can be entitled provided I'm okay to give the difference. 20 rupees per share. I'm saying, okay, I'll pay 20 rupees per share. Now, or equivalent that number of shares. If that be the case, it's okay, it's still valid. Because the purpose of the law is what? You should not save yourself by paying at a discounted price. If you're okay to pay the discounted price, law don't have a problem. So if the promoters agree to pay the difference of the price. What difference? Previously acquired price and public issue price, we don't have a problem. Acquisition price and public issue price, the difference, I'm agreeing to pay. Then it's okay, law will not say there's a problem. Understood? Okay. Now people, again, if those securities are acquired pursuant to a merger, I got the shares merger. So merger, the price can be less because it's approved by NCLT. So it's not you decided a fair price. So decided by NCLT. That will give an exception. You receive the shares because NCLT pursuant to a merger has approved that price. Even if that's a discount price, you're okay. Clear? Okay. If the IPO is done by government company, infrastructure sector, promoters need not worry about previous acquisition at a discount. Previous acquisition at a discount will not be a problem if it's a government company going for infrastructure. Okay. Now, let's take 3 points. Fourth point I'm explaining, I want you to read. Fourth point is like, say for example, I was having convertible debenture. So I'm having convertible, sir, I'm having exception because convertible debenture is also fine now. Convertible debenture should be converted at whatever price. The lesser price, we have a problem. What if the conversion is happening also in public issue price? It's okay because you are at par. At par, that's also exception. The conversion is happening, okay. Convertible debentures are to be converted at public issue price. Can I take that? The convertible debentures are agreed to be converted at a public issue price. We don't have to worry because upon you are matching the par requirement. So if you are able to match the par requirement, how? You are agreeing to pay the fair price. It's because of a merger or government company going for a infrastructure sector IPO or convertible debentures are agreed to be converted at a public issue IPO price. We don't have a problem.
Convertible is paid to win.
Correct. Upon difference you have to pay. You are agreeing to pay the difference. Okay. Welcome to the most important subject of CS professional. Last point. I'm doing a convertible debenture. Convertible debentures conversion is happening at a public issue price. Then we don't have a problem. Suppose you are matching the tally price now. I have to contribute 20%. I'm having 20% of convertible debenture. Okay, fine. At what price you are getting converted, sir? Correct. But the terms agree were different means you pay the difference. Apply your mind. 80 rupees was the agreed price. Okay. Then you agree to pay the 20 rupees. Interpretation. Good. That's how you interpret. These are not given in the book. That's how you interpret.
defined at 1 year.
See, everything is 1 year, no, because 1 year acquisition, no. The standard point is on 1 year, no. So that's the only way. That's why I didn't explain there. Why again confusing? Because everything it was like last 1 year you have done. 1 year. So I don't want you to read that 1 year again, da. Why? Why again you will read 1 year? Just take that 4 points for an exception scenario. Okay. Okay, 2 minutes. Help me. Which subject or name is interesting for you? CIVA, yeah. Interesting name. Still mad, CMAD. Sai sir is going to take. No, no idea. Sai sir will take. Probably. No. You're going to take CMAD. Good. CMAD is also more of a like you have provisions but more of EST. You need points to remember. CMAD. That's not why I'm not taking CMAD at all. You give me 2 papers, I can take 3 papers now. CRBA I can take. Corporate finance I can take. Drafting. That's a paper. My goal would have been drafting, let's go some 60-70 marks and I crack. I like that subject because you know how to draft. Resolution drafting was happy, company law. From that part, drafting. So your drafting of company law is one segment, notices, etc. Thankfully, that will be your starting. Second drafting is how do you draft a sale deed. You know the outs sale higher price. You know the theory. Drafting will be so easy. But they'll ask you maybe that's only scenario where you get practical questions. How to draft. 50% can be from drafting area alone. But easy. I like that. People don't like that because theory is only 50%. But there are attempts where they ask 80% draft. 20% theory. Very rare. 20% draft, 80% theory. Very common. 50-50 also the people find it challenging. Because they know that I know the theory, I don't know how to draft. So if you manage time, drafting is the easiest paper. In the entire group, I like drafting. If given my chance, I'll be happily doing drafting paper. So comfortable paper to explain stories. It's good. Story here, not story. Like I see here, Swiggy delivery. I know you have to explain. 1 year. But you don't have much of a logic. Here you need to apply your brain to get the logic. Why? So that part is challenging as a teacher. Drafting is also actually challenging but if you get the challenging that part, drafting part right, like this is the format to have that inbuilt drafting skills. If you get the skills, remaining but you will enjoy that. They'll ask you to do a drafting, you'll be like, I'll draft, sir. I don't want to copy paste. I'll draft. That practice will help you to crack very easily. EST is in group 1 now. CMADD first group. First group. Here 2 theories and 1 open book. Here is your CSR. You take it. First group. Second group, what is your open? SM I am not taking. SM Sasikiran sir will take. I guess. Because he takes SM economics. SM for CA internal. CA foundation, you will see some videos. SM. I am not a SM fan. SM, it's not law. It's more of points which you have to, more economic terms. How to analysis. I have received multiple comments that you took accounts in CA Foundation. I received some students. I don't remember. I don't know how I will be fitting into accounts. The 22 batch, 2022 batch. No chance. CA Foundation accounts. No chance. My stream is simple. CA Foundation Law, CA Inner Law, CMA Inner Law, CMA Final Law, CA Final Law that time, CS Executive Company Law, CS Executive Labor Laws, CS Executive Capital Market Securities Law. Previously, initial days, ECIPL. Initial days, your drafting, corporate restructuring. CMA DD was not what, just the due diligence. One part, DD. One DD. I was taking that also. Now it's been a while. Okay.
Sir, drafting it's like you have to just make it nonsense.
Yes, drafting is more of that thing. You have to rental agreement. You'll have a 25 pages. We have only 1.5 pages drafting agreement. So they'll ask you theory also. What are the factors you'll keep in that? Name of the purchaser, buyer, what consideration. These are theory. If you get the theory, drafting becomes automatically easy. So that's
Sir,
it.
in executive for 5 marks we have to write.
Actually, you are writing. My students, I'll ask 8 marks also 1 page. Who has asked you to write for 5 pages, 6 pages around?
The 2 pages.
Well, I'm writing company, two resolutions.
Huh.
I wrote my own words only, but the content is the same.
Huh.
Both they gave 3.5 and 3.5.
Out of 5.
Out of 10 marks, I got 7 marks. Two resolutions.
Correct. Out of 10 marks, you got 7 marks.
But I didn't study anything.
That's why resolution, there is no format. You are telling what has happened. So, but that way, drafting company law will be easy. You are comparatively okay with company law approach, it is easy. Second part, you have to draft as an advocate. That's that point. If you're having a LLB backup and you know how to draft things, already experienced lawyer, I find it easy to draft. I'm not a lawyer, but I'm a company secretary. I find it very easy. Drafting is the only paper I did. Say for example, I'll not say it's sir, poi sir. Don't tell me it's wrong and all. For drafting paper, I was able to do 4 times revision on theory part on a single day. Say for today's exam, day before the exam got over, you have time for drafting paper. I was able to do a 4-time revision with theory. Now, one subject revision itself is challenging. My other subject, CS professional, nothing. CS executive also, kind of 1-time revision. Here, I was able to do a revision on 4 times on the day. So, because theory was so easy, drafting part was also fine. So, yes. For me, drafting was one scorable paper. So, I literally believe that if you are okay with drafting, you are okay understanding the theory and drafting also. Drafting is easy paper. Okay. Okay. People. Promoters contribution. The promoters contribution shall not be applicable in FPO in the following scenarios. Meaning, you are going for a further public offering. promoters contribute 20% of post-issue capital need not be required. Scenario number 1. Sir, I don't have an identifiable promoter. For if IPO, it was the only scenario. You don't have an identifiable promoter. FPO, one scenario is you don't have an identifiable promoter. Second, the equity shares of the issuer are frequently traded on stock exchange. Last 3 years, your shares are having good volume. People are buying, selling. There's a huge demand. Frequently traded shares, total 100 shares, at least 10 shares are moving daily basis. High demand. People are looking for your shares. Then it's okay. Even if there's no promoters contribute, we are allowing you to do IPO. One is no identified promoter. Second is your shares of the company are frequently traded. 3 years, if you remember, okay. No, it's okay. Third, whatever complaints comes to the company, 95% of them are resolved. 95% of the complaints on a quarterly basis are being resolved. The issuer is in compliance with SEBI LODR. Pakka company, I'm complying with LODR provisions. Okay. People, there is an amendment here. Okay. So what are the points? No identified promoter, frequently traded shares, redress the 95% of complaints, continuously in compliance with LODR. Now people, LODR talks about different provision. Audit committee, number of meetings of the board, general meeting related provision, reportings, disclosures, etc. So I have to be super compliant. Assume that I have not complied board composition properly, meaning because of 2 people resigned, I have to find new person. It took me 3 months. Now, can I say that I'm actually not in compliance of what LODR continuously because of this reason? Which reason? Board composition point. Law is telling you, if the point is regarding board composition, because of board composition point, you are not in compliance with LODR. It's okay. Other points, if you are not compliant, you are not going to call yourself as complaint, LODR complaint company. But relating to board composition, even if not complaint, we presume it's LODR complaint. Clear? For a board composition point, even if you are not complaint, law presume that LODR is complaint to the fuller extent. Other provisions, you are not complaint, law will say non-compliance, you cannot go for a FPO without promoter contribution. But in case of this scenario, only related to board composition, law is giving an exception. Clarity? Try that point in your exam. Amendment. Recently added point. People okay? Easy? Okay. Okay. These points are already covered. 20% conversion. One more point is like promoter shall contribute in a FPO. It's an FPO related point. In an FPO, you can contribute like this. Either you contribute 20% of proposed issue size or post issue capital. Okay, people, one line, remaining part you don't need. Okay, super. People, FPO, the company is going for 100 shares. Prior holding was 100 shares. Company is going for 100 new shares. Pre-holding was 100. Law is telling you promoter is having a freedom either to subscribe 20% of this 100 or 20% of 200. Either you contribute 20% of issue size or 20% of post issue capital, meaning pre-issue and the proposed issue. Okay. Okay. Now, assume I'm going for a composite issue, meaning 200 new shares and 50 shares in case of rights. How much I have to contribute? 20% of, ignore the proposed is done. Now we are talking about only the issue size. How much I have to contribute? 20% of 250 or 20% of 200 only. I'm having a composite issue. We're having public issue and rights issue. So public issue is for whom? Existing holders only. No. What I'm taking? I'm taking only rights, not taking public issue. I'm existing holder. Company is going for a public issue and rights issue. I will be given a choice to take shares. So to meet the 20% mark, what I'll do? I'll say rights shall take, sir. Ha! I have complained. Law says no. Rights you take or no, I don't care. Exclude rights part. Public issue component. 20% should be taken by you. So, point goes like this. In case of FPO, promoter can contribute either 20% of proposed issue or post issue capital. In case of composite issue, meaning rights issue, then 20% should be on that part other than rights issue. Clear? Online? Okay. Okay. Securities ineligible, you already know. Correct? Yeah. Okay. Okay. Done. You need a break now. Okay. So we'll take a break now. We'll come back by 11. Whenever you feel that point is too much, I need to take break. You need to take break. I'm okay. My purpose is to make sure this paper should be like okay for you. Not I should. So if Saturday or Sunday I might have to extend 1 hour, please. Or say for example Sunday I have to extend for 5 hours. Assume that. And you can go home. I'll record the calculations and send it across. For sums part, no. I have to invent sums. I have to say, hello ChatGPT, give me a question. They'll give some question, I don't know. So I have to work on the sums part. I'm working parallelly. Probably I need maybe 10 sums or less than 10 sums. Have the question so far asked is somewhere around 8, 9 only. Looking for some 10 sums. If that's not working, no, I'll explain some model sums and I'll try to create sums and send it across to you. So you can work on that. Sums including the answers. But for that I need time after the classes. Extra questions. I'll see to it because I have to implement a topic and see if the question can be asked. See, that's a problem. I never tried all this during my professional days. Like, I know 45% of theory. Who cares? Sums are this parked. Now I'm feeling that. So I message someone. I message Isa saying that, sir, it was very fine. Until I realized that I have skipped all these portions in sums during my professional and they never asked. Everything was an optional question. We had last question was 7A or 7B kind of 6A or 6B. They asked all the sums during my attempt in 6A. I was like, oh, 50 marks gone. I saw 6B. Okay, chill. Okay, we'll take a break and come back. $15 minutes, da. Come back by 11, 30 minutes. Yeah. Because these are, see, promoter shall contribute 20% as the case may be by way of equity or by way of convertible security. Same thing. Conversion price being at predetermined weighted average price. Different rates means weighted average. Same point. Because difference between IPO and FPO. Okay, so selective reading da, don't overdo. Okay. People, lock-in period. Somewhere we have seen lock-in period. 20% pre-issue. I didn't teach you. Yes. Okay. So lock-in period. People, those shares which is called okay, I call it as minimum promoters holding. Minimum promoters holding is how much? 20%. This 20% can be contributed by AF blah 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 without being identified as promoter. Those people also should be locked in, meaning you cannot sell this for a 18 months. People, did you see the heading? Heading says, your book also says 3 years. 3 years, huh? What is your same saying? 3 years, 18 months. 18 months. Older version was 3 years. They removed this point. They forgot to remove the heading. Okay. So, promoters, including this thing, but that is for minimum. Minimum promoters holding should be held for a period of, should be locked in for a period of 18 months from the date of IPO. Easy point. Promoters plus the support staff. Promoters are contributing 22%. Then lock-in period applicable? 20, yes. 2 also, yes. Meaning, anything which you are contributing excess of minimum promoters contribution. Meaning 2%. 22 means 2%. 2% should be held for minimum period of 6 months. 20% should be held for a minimum period of 18 months. Sir, what about promoters having SR equity? SR equity shall be under lock-in until conversion to equity shares having OTS at the blah blah blah. Okay, see. People. SR equity shares shall be under lock-in period until conversion into equity shares having OTS, same as that of ordinary shares, or shall be locked in for a period specific, whichever is later. In case of FPO, SR equity shares shall be under the lock-in until the conversion of equity shares having OTS. Superior voting rates, 1 share, 1.5 vote. SR, 1.5. Now DVR, I told you, DVR cannot be converted in normal into DVR is not possible. SR is issued as a SR, but it will come into a climax called as normal equity. Now, I issued SR. SR has run, like say for example, 15 months. Now it's getting converted into normal equity shares. Now, normal equity is there, no? I have to stay it into lock-in period for a period of 3 more months. Where should I SR plus a conversion period should match 18 or 6 months as the case may be. SR will convert to equity. Conversion for SR and equity should be clubbed together either for the computation of 18 months period or 6 months period. Yes. Okay. Until they are converted, you have to conversion also. You have to think about the existing criteria. Now last point. So did you delete that 3 years? Okay. Now, people, what about held by promoters, held by persons other than promoters? Tell me who could be these people? Huh? Before IPO, who is that category other than promoters? Huh. Angel, everyone will be covered here only, no? AF. Now? Huh? Members means who are members? Which members? Publica. We are yet to go with IPO, held by other than promoters. So my question is, you offered 100 shares. 100 shares, 80 has been taken by public. Whether they have to lock in, 0. Pre-issue holding of other than promoters, assume that you have done for private placement. Employee will be asked for stock option now. Talk about private placement. I did a private placement. Now there are people who are part of the company because of private placement. Now the company is going for IPO. Law is telling you those people also should be subject to lock-in period of 6 months. Entire pre-issue holding held by other than promoters. Example, private placed people. Those people, employee, you can write employee directly because ESOP. ESOP will have extra conditions. Lock-in period, that is a lock-in period specificity based on that.
Like for consideration, they are given shares. They are also
Any person other than promoter or support staff, prior holding people, they should be having a lock-in period from the date of IPO. What about IPO people coming as IPO? Nothing called lock-in period. Okay. So the provisions of this shall not apply for okay. Okay. The provisions of this particular lock-in for others will not be applying for employees under stock option, employees under stock appreciation. Easy, 2 points to remember. Employees under ESOP, employees under stock appreciation. Third point, other than this category AF, you are given as a private placement to AF. Those people also, lock-in period is actually applicable, except in a scenario where they have already purchased the shares 6 months back. Meaning, they are holding a shares for more than 6 months. They need not again go for a lock-in because already 6 months over. Again, why should I lock in? The company is going for IPO on January. They have purchased their shares on October. Company is going for a January. They have purchased on previous year October. October, November, so 3 months only over. They have to still hold for another 3 more months. Assume that they went for a private placement to AF. These people purchased shares on February 2024 and going for IPO on January 2025. No need to worry because I'm already holding the shares for more than 6 months. 3 points. The requirement of others to hold for 6 months will not apply for stock option, stock appreciation or venture capitals provided they are holding it for minimum period of 6 months. So if you write theory question, write venture capital. 3 points. ESOP, stock appreciation, venture capitalist. Easy. If you want to add more value, 6 months. I don't generally entertain people to write too much. Keep it simple. Unless you need an explanation, go with that. Okay. Chill. Online. Employee under stock appreciation, employee under stock appreciation, and your shares held under venture capitalist. Okay, just keep venture capitalist. Easy. Now, people, venture capital again, you have to remember, not the support venture capitalist. First point, supporting staff, 10%. Those people, lock-in period. You're not talking about the support staff, non-venture capitalist. Provided they are having 6 months period, you need not worry. Clarification. If you get this right means you are on awesome company secretaries by birth. We belong to that category. What is a stabilizer? Stabilizer, you have heard of a word called stabilizer? Where? Fridge, good. Super. Like the ideas kids you are talking. Mine is not different because I'm 2006 born, so I don't know. You might be knowing. Okay. So, people, there's something called green shoe option. The person who does this green shoe option is called stabilizing agent. One liner which you have to keep in mind. One liner. So, people, say for example, there is no movement in my shares. What I'm doing is like, I asked my girlfriend, hey, you put an order for selling 5 shares. I'll buy that. So she's putting like 500 shares, I'm buying. People are watching, hey, what is happening? That share, someone is selling, someone is buying. Something is happening in the market. That panic, they'll also create an artificial demand. This is not allowed by SEBI. What is allowed is, you can create a fake demand. I'm taking stabilizing agent in a manner which will make you understand. It's not the case. Assume that there is a company, good company, it got pitched in a IPO, now the shares are not moving. SEBI says, okay, you do a fake market. SEBI says, SEBI says you do a fake marketing. You give some shares to, so promoter, from his 100 shares, he's giving some 80 shares to a stabilizing agent. This Anna will create a demand and supply. Now, this Anna is called stabilizing agent. The process by which he is creating that is called green shoe option. Now, promoter will be having lock-in period, no? So, I'm giving temporarily for him to create an artificial demand. After the demand is created, what he'll do? Return the good to the lender. I'm giving lending, no? Who's lending? Promoter. Now, remaining period of lock-in also you have to comply. So for the lock-in period, they're saying, if in case you have 18 months of lock-in period, 15 months you give temporarily for lending institution. Green shoe option. He's returning after 15 months. Oh, super, sir. Then I'm free, No. You have to comply 3 more months of lock-in period. Clarity undu? Kind of, yes. Okay, Ada. So, in the entire paragraph. Okay. Lock-in of partly paid securities. The specific securities are subject to lock-in are partly paid up shares, and the amount called upon such specific securities is less than the amount called upon the specific security issued to the public. The lock-in period in lock-in shall end only on the expiry of 18 months after the specific securities have become pari passu with specified securities issued to public. Assume that here promoters are having pre-issue holding. That is a partly paid up shares. Now, for you 10 rupees shares, 3 rupees paid up. Remaining you have to make 7 rupees. General public, it's 10 rupees shares. I have already made calls. Now, calls which are made for one shareholding held by promoter because of previous holding, and IPO is mismatching. Meaning these shares are 3 rupees paid up, these IPO shares are 7 rupees paid up. Law is telling you the lock-in period is still applicable till both of them are coming to that proportion. Like say for example, now promoters I made second call and made it to 6 rupees paid up. Promoter shares I'm calling it to 6 rupees paid up. Now the public share is also, normal share is also 6 rupees paid up. Now there's a tally, no? You have to ensure that the tally is being maintained throughout. And it's a partly paid up shares. How partly paid up shares are? I cannot go with a public issue and call you people half, these people only for application money. That will never happen. This is happening when pre-issue, some other class A issued to promoters, which is partly paid up, and class B IPO shares are also partly paid up. Law is telling you, try to make it equality. If not, no, 20% of what I am contributing may be 3,000 rupees. 20% when computed to IPO shares, it might be 6,000. Law is telling you, you have to match that as well. You have to match the requirement of post-issue capital if it's a partly paid up shares. So partly paid up shares held by promoter should be matching as the amount which should have been paid in case of partly paid up shares, which is in IPO thing. Not an exam question, but matching principle.
Match will be locked.
Under matching, it should be locked. Until matching of, then lock-in period. 80 months. Lock-in period is applicable for those shares also. Till you match.
More than 18 months.
Expiry of 80 months. Up to 80 months. No, 80 months is the tenure. No. My promoter also, you have to match and keep it for lock-in for a period of 80 months.
After 18 months per month.
It's okay. Because lock-in now. Here.
They are converting the companies, giving you power to raise.
Then that is fully converted. Now again, IPO shares getting 18 months. Till that point you have to do. So companies should ensure that they are at par. So not an important point. It's just the thing that promoters holding should be, even if it's a different class of shares, should be locked in for 18 months from the date of exit. Different class also.
Anyhow, for 18 months it will be locked.
Yes. Yes. That's why I'm not doing, it's not like this. The certificate of special security, this is not even an important point because share certificate is no longer in the picture. We have only demat thing. So something are very old. Not taking that. Now people, can I pledge my shares? Promoter can pledge, no? Promoter can pledge. But they cannot pledge SR equity. Now, previously, as I told you, promoters done a pledge should not be added for that 20% shares. Now, after the IPO, can I pledge those shares? Previously, it was like, yes, you may pledge. Now the law says, yes, you may pledge. Now the pledge should be in the benefit of the company. Meaning, Mukesh Ambani is having 36 shares. If you want to do a pledge of shares, you can do for whatever reasons you want. You are for a son's marriage, I don't care. During the lock-in period, you cannot pledge unless it is beneficial for the company. So anyway, you can pledge. You are a shareholder. It's your asset. You can pledge. But during the lock-in period, you cannot pledge. But you can pledge, provided your pledge is happening in the best interest of the company. So, pledge of locked-in shares by promoter. So, it can be pledged with bank PFI, provided so why am I taking the loan? For the purpose of my company or the purpose of my subsidiary company. So, promoter can give shares which is under lock-in to Muthoot, provided promoter is not taking his loan, personal loan. He's taking a loan for the benefit of company or its subsidiary, and this is as per the terms of the loan. The terms of the loan says okay. I'm okay to give you a loan based on those securities, then you can do. And the loan should be taken for the benefit of the company or its subsidiary, not for the personal benefit of the promoter. Epo, during your lock-in period. Other than lock-in period, you are free to use that money for whatever purpose you want. So during the lock-in period, promoter can do a pledge, but the pledge amount should be utilized for the purpose of the company or its subsidiary. People only know. Good. Now people, again people remember here also except SR. Correct? Except SR. SR cannot be done there. Same thing. Now again next topic. People, during the lock-in period, can I sell your transferability? Meaning sell. Can I do a sale of normal shares? SR you cannot sell. Lock-in period, can I sell? You can sell. Say for example, your promoter group, ABC are promoter. Can A sell to B or C? 100% okay, because again 20% held within promoter group. Or any promoter group within the control of the promoter. Provided the new person, meaning A is given to C, C should also fulfill the obligation of lock-in. So shares under lock-in except SR can be also sold by promoter to another promoter, but the purchaser transfer should comply with the lock-in requirement. Okay.
Stands at another broker, combining the period, there should be the period or new one or 18 months.
From the I was holding the promoters, to be lock-in shares for a period of 12 months. I'm transferred to promoter B. He should also maintain for 6 more months. So it's not about the promoter, it's about the share, underlying shares. Done?
At the time of lock-in.
Huh.
Second point, can be pledged in terms of sanction of the
At the time of giving the loan by the bank, they are telling the terms of the condition of the loan says, I'm giving a loan to ABC Limited based on asset given by promoter. Loan agreement should talk about these terms. No?
But it's for promoters personal.
How da? Because point number A is what? Based on loan agreement. Loan agreement. It's not two scenarios, da. Okay, cool. Now some points are easy. Next set. Till you reach pricing, remaining points are easy. Ultra slow motion only, no? Now I'll give you a guess. Ultra slow motion, how many pages we have moved? 90 pages only. Tell me 40.
Chapter starts from 237.
Now
we are in 256.
Okay. I'll move. 50 pages. Okay. Okay. Now, people, appointment of intermediaries. That's our heading. Sir, first intermediaries, merchant banker, MB, Mahesh Babu. Okay. Sir, what if you have more, like say, you appoint a merchant banker as head girl, lead manager. Sir, what if you are appointing 5 merchant bankers as lead manager? Then Okay. If you're appointing more than one, you can write first line also. Where the issues managed by more than one lead manager, rights obligation of each person should be separately aligned. Okay. So I have made 5 merchant bankers. At least one shall be an independent person. You can take your family members to be a lead manager, but at least one should be not connected to you. Sir, what if they are connected? 5, sir. Try to make sure that one is at least independent. So what if no, sir, all the 5 are connected only? Law is telling you, okay. Then the associate, the connected person should do only marketing, meaning prospectus, public issue related thing, not other works. So try to bring everyone independent. All are connected, also try at least one person independent. No, sir, everyone are independent. At least limit that independent, connected person to marketing of the issue only. Other things don't handle him. Ask him to handle. Limit your work to only marketing. Drafting contracts, bank account opening also should not be given to him. He should limit himself to only marketing role. The issuer consulting with this lead manager shall appoint other intermediaries. Tell me some intermediaries. Registrar to issue, share transfer agent, stock broker because secondary market, underwriter, custodian. Okay, good. Depository. Okay. Now, the issuer shall enter an agreement with lead manager as well as enter an agreement with other intermediaries. Okay. Then appointments. You have already received what? 6 points. You need 5 solid points. 6 points are done. We'll do 2 more points. 1. People, I'm doing a book built issue. What is book built issue? Price band. Instead of giving a fixed price, you will give a price band to decide. There, the intermediary will be called as syndicate member. Instead of calling them as lead manager, we call them as syndicate member. Now, you shall have to appoint company secretary as compliance officer. 7 points. Easy points. Okay. Now, disclosures. Sir, usually you draft a sample. Give SEBI for its comments. After comments, you will prepare a full-fledged document. The draft offer document or the offer document should contain only what? Material disclosures which are true and adequate. Give all those information which are true and fair so that people can take a proper decision. Give those information which are true and fair, which will give information. Okay. Let it be read in prospect or shelf prospect. This should have all disclosures as per Companies Act or disclosure as per ICD regulation. Okay. Lead manager should do a due diligence, your paper. Analyze how well the plan will go. And he will ensure that he can call issuer, promoter, directors to fulfill their respective obligations. Promoter, please bring in the lock-in money. Hey, publisher holder, make the call money. Hey, director, give a declaration. Those things can be called by the lead manager. Say for I am going for IPO. My finance information should be fresh enough. What if your finance information are dated 31/3/2024 and you are going in January 2025? It's like almost 11 months old now. So he should ensure that are not more than 6 months old. If that's more than 6 months old, try to get another statement. Good points. Okay, people. Now let's go with filing of draft offer document. Okay, sir. The issuer shall file draft offer document with stock exchange. Issuer shall file 3 copies of draft offer with SEBI. So issuer shall file draft offer document with stock exchanges as well as SEBI. 3 copies with SEBI and all the BSE or NSE as the case may be, including details of the promoters. Blah blah. Details of the promoters. Okay. Like PAN, Aadhaar, etc. Details of promoters. Okay. Clear? Now, this is done by company. Now, our Anna, lead manager. Okay. He should also produce previously prepared due diligence certificate. If it's a convertible debenture, due diligence certificate from a debenture trustee also. A certificate confirming that we have entered in the agreement between issuer and lead manager. A certificate that we have already entered an agreement with the company. A certificate of due diligence that the company will be able to implement the particular scheme. Third, it's a convertible security certificate from the debenture trustee. Now what SEBI will do? SEBI may specify some changes on draft offer document within 30 days of the following. 1. Sir, I received draft offer document. SEBI has nothing. So SEBI will say, okay. They'll try to give a reply within 30 days. No, sir. SEBI asked for a clarification. You gave a clarification. SEBI asked for a clarification. You are given a clarification. From there 30 days. So no, sir. SEBI wanted some clarification letter from RBI because it is a banking company IPO. Regulator. Or SEBI will be okay if at least your stock exchange is okay. So SEBI may give a comment on your draft offer document within 30 days of the following, later of the following, any of this following. 1. Simply on the draft offer document. After draft offer document, SEBI feels there is a clarification. You gave a clarification. From there they can give a comment. Or SEBI asks for clarification letter from regulator. Regulator is giving a letter from there 30 days. Or I need not sit and decide. Anyway listing is happening in BSE. BSE people are okay. Why should I sit and review again? From there 30 days is a due date. Before you file the final document, what are observations given by SEBI should be taken into consideration. SEBI has given what? Some observation, no? That should be undertaken in your proper final prospectus before you proceed with this thing. Okay, fine. Others are okay. So once the SEBI is giving you a final point, they are giving you observation. That observation should be taken into consideration, and you redraft your draft as a final document. That should be submitted. At the time of submission, make sure all those changes asked by SEBI should be taken into consideration. I have filed, prepared, and given. I received a lot of into marks. What are you doing there? Okay, still. So that's how. Others are okay. So these are the points which how to file a draft of a document. Your story ends with a draft of a document. You just relax. I'll mark the next point. That's all. 2 minutes you rest. Oh, wait.
See, it mixed two colors together. So
That is
Oh.
very important.
Oh.
That exclude height issue. That's
Oh, okay.
composite plus height issue.
Blue and
blue, pink, orange.
like hair color you are changing the highlighter. Okay, good.
Blue orange. Blue plus orange green.
Physics class ada? Physics alla physics ara? Chemistry ah? See, adu kuda theriyala. Chemistry you mix two colors. Violet plus indigo, violet plus blue is indigo. Those color combinations. Chemistry ah?
Chemistry.
You are BSc? So. But you know chemistry, no? But the color is good, no? You find it okay?
See his book, it is
Not good. So online you are using highlighters, at least some kind of marking. Yesterday you find it easy when you mark. I mean today, see if it's making sense. Is that making sense? No, done. 3 colors, good. What happened?
pink class.
Before exam.
Okay, one more small topic, then we'll breathe. Small topic. People, draft offer document, main document shall be available for public. How, sir? You have to keep it for public comments at least 21 days. Where website of company, SEBI, and stock exchange. And okay, both. Lead manager also. You have to put the same in the website of SEBI, company, stock exchange, and lead manager for a minimum period of 21 days. Why? Hey, lead manager is rich kid. Deal manager is not a person, it's a bank. Similarly, sir, okay, website. How else we can communicate? Put it in two newspaper, English and regional. Three. Three. Okay. English, Hindi, and regional. English, Hindi, and Malayalam. Don't use vernacular. Regional. Okay. Use vernacular. Now, one more point. If someone is asking for a copy, please give the copy. Last point. People are asking for copies. Public is asking for a physical copy. Give them physical copies. Hold. 1, 2, 3. How do I find draft offer documents? For how to ensure the public is knowing your draft? Can the public give comments on draft? Such kind of stories will revolve on 3 points. Public is also having a right to comment. Where will I see? Either you see from newspaper or website. Website or what? Say me. Okay. Sir, no sir, I am very poor. My eyesight is poor. Okay, you ask and get physical newspaper. Physical copy. You ask and get newspaper. Cool? Good. Just now I tried matcha. You know what is matcha? Matcha powder. They were trying matcha powder, like green tea powder kind of thing. So I put up here a story. I need chaya. I don't like. It's tea only, but I want proper tea. Chaya. I like that feeling when you make tea, and you make and you appreciate yourself. Wow, Sooraj, how are you making this kind of tea? It's so cool. That's how it that appreciate self appreciation. I make from every food I make. My best reward is me telling myself, awesome biryani. I have never tried such kind of biryanis in my entire life. I give these comments to myself. I'll thank myself. Wow.
Your home, sir.
They will not eat. Innada panni vechirken. So I usually go with my biryani, my food. So once I fed Sai's tomato rice. I think tomato rice. So like he was happy. I was like, wow. I said, sir, thank you. Now tell me, unme sollenga. Like, it's good only, da. I said, okay, thank you. So how many of you love cooking?
It's good to do something.
One packet rasa powder, huh?
Everyone in our class rated.
Oh, she brought. Okay, nice.
He gave me 2 times. Sir.
That
Good
2 days
evening, Mama.
ago, it was not good, sir. That time
I made only 2 times, sir. 2 times salt powder. What is this?
he tried experimental dish.
Okay.
Special cube.
Tea or coffee? Coffee.
Both.
Black coffee. Okay. No, like, so you shouldn't see my expressions. Just because I didn't like black coffee doesn't mean that black coffee is poor. Okay. Okay. Tea or both.
Ginger.
Ginger tea. Both. You don't like milk teas. Tea. Okay. Lemon tea. Only? No chai.
The beauty, sir.
Tea.
filter coffee.
I'm not that fan of filter coffee, but I like filter coffee at some places in Chennai. Some places. I like Kumbakonam filter coffee. Super Arabic. But usually tea. I grind my masalas. I'll buy everything like masala mix for biryani and I'll make a chai. Masala chai. It's masala chai is different, but I make something called biryani chai. It's extra. Something which is more spicy than masala. Masala you'll have a set of masalas. Whatever things which you can put for biryani. Okay. But I do it as like without sugar. Milk tea, dark, without sugar. She feel I like that. See, without that, no, I cannot sit with this paper. I'll be like, I'll go, I'll cook, eat and sleep 1 hour. I'll wake up and make a tea so that next half an hour, 1 hour, I should not sleep. That means tea. No sugar, nothing. Well, like, first episode, like, pricing. Promoter's contribution should come automatically. That way, I'll drink tea. Then probably I'll go for gym 1 hour, come back, again sit with sums. That part of the day is now I'm not liking. Sums, parallel sums, no. 1 hour I'll put for sums. Like, oh. You know? Sorry. Same as the sums. அப்படியா இங்கேயா சூப்பர் வெட் சைடு that side food court side that top floor opposite temple I've seen that
Following your same schedule.
அப்படியா good sleep super
6 back.
nice good super so how long are you planning to be here till the class? I mean, 2 months. 2 months only, no? Class. Total 2 months. March, April, May, 3 months. But scheduled for all the subjects? 5 subjects. Okay. Theory is 5 subjects. Or 4? 5. Okay. All subjects. 5 subjects and 2 open books. எப்படி
One module, one paper could have been service.
Would have been nice.
It's very dry.
Really disappointing.
Same reaction.
Same reaction. I'm like, I'm happy having all the theory. All papers they are happiest. Give me some much professional level is like too much. See, as a company secretary, we don't have that too much of sums in our like day-to-day life. Then why should I study sums?
Fully theory studying.
See, I would have been happy if it's taxation. Taxation is like more of applicable law to a sum, not FM. Here we have something called as FM related question only. The sum which you have is kind of an FM, diluted FM. That's why after I have to sit for 1 hour after gym, 1 hour of sums to manage how to apply. What is the logic why they have asked this question? Which topic is relevant? So there's one question on cash credit. I went to the theory part of study method. We talked about only one para, easy para, without telling what is the equation, nothing. In sums they ask for 3 marks, 3 mark sums, but to compute. It's not able to understand how to come to an answer because we don't have a pattern. I'm trying to figure it out because figure it out is difficult. If you have an answer, copy paste and you'll be like, this is how you have to explain. Now answer is not there. How to find that answer? How to apply the logic when the theory itself is this much? Okay, chill. Now people. Pricing. How do I determine at a price? How do you decide price? It can be a fixed price issue or a book built issue. So if it's a fixed price issue, meaning 10 rupees share, IPO or FPO may determine the price of specific security in consideration with lead merger manner. That's a fixed price issue. Or try to figure it through book building. Okay, either you go for a fixed price or book building. Now you know how book building works. Okay. Examples can be like easy, but theory can be different. So I'm putting a price band like 100 rupees to 150 rupees. And I want minimum 30 shares. 30 shares to be allotted. Now you are an investor. What price you will prefer? Lowest price. So most of the people will go for a lowest price. As a company, I will be looking for highest price. So I want to sell 30 shares for 100. So you cannot go less than 100. Say assume that 100 people said they are okay for 80 rupees. Twenty people said they are okay for 100 rupees. 90 people said they are okay for 105 rupees. 13 people said they are okay for 109 rupees. 2 people said they are okay for 112 rupees. 10 people said they are okay for 120 rupees. They are okay for 148 rupees. Now as a company, what price do I prefer? 148. So if I go with 148, how many shares I can sell? But I need how much? 30. So I'll go with next price. What is next price? If it's 120, how many shares I can sell? How many shares I can sell? How many shares I can sell?
15.
I can sell 15 because they are okay with 148. They don't mind paying for 120. No, so I can okay with. So, but I need more. I'll go with next price. Next price what? 112. If I go with 112, how much people I can get? 17 people. But I need more. If I go with next price, 109, how much people I can get? 30 can be matched. So I'll fix the price as 109. This kind of process is called book built issue or price discovery mechanism. This is one mechanism. Other mechanisms, you are saying 100 shares at 33 rupees fixed price issue. This can be decided by issuer and deal manager or book build as per the bidding of people. Online, good. Fine. They have given an easy example, but I'm not taking that. I will given a complicated example. Now, they can ask you price and price band. First, expect a question for pricing. People, don't complicate things. Okay. Your language is built in different manner. Language is different, built different. we focus on proper thing. We know the theory. Theory is what issuer may have a price in draft prospectus or either the base price or price band in red herring prospectus. But if you see, first word is they know that in a fixed price issue, you talk about the price in prospectus, or red herring prospectus, you'll say either the base price or the ceiling limit in case of red herring prospectus. Red herring prospect. Book built issue, we use the prospect called as red herring prospectus. But if you see, they have hidden use the word called as price band here. First statement. Why? No. And then why issuer may mention a price or price band in draft prospectus? Why would they use that? It's not fair for them to use. Now think like this. It's an interpretation. I'm not asking you to study that. That point we are skipping. Price band. First point. Let's assume in a public issue, red herring prospect, I'm saying 10 to 20. That is called red herring prospectus. I'm going for a fixed price issue. I have two stages. One, draft stage. Second, final stage. Now draft stage, I'm confused. To have a price, what I can do? Talk about a price band. And when you submit the final prospect with SEBI, tell the full price. It's not price band which is given to public for bidding. So first statement where they use the price is called fixed price only. Or the term which is price band is used, how to interpret that is, okay sir, they are confused now. Which stage? Draft stage. Now, when you file the prospectus, shall contain only one price. One price. In the pricing, so I would say you read this statement along with this. However, then only price band point will make a sense. Second point, for a floor price, either you say a base price or a price band in case of red herring prospectus. Okay, manageable. You're able to interpret, but again understand, I don't want you to read price and price band in first point. Fixed price in fixed price issue, book built issue, use a price band. Okay, under control. Okay. Now, I'm going for third point. The floor price in case of book built issue, that cannot be less than face value. Face value of shares 10, you cannot say 8 rupees because you're issuing shares at discount. You cannot do that. Floor price cannot be less than face value. Second one is clear? Okay. Okay. The issuer shall announce the floor price or price band at least 2 working days before the opening of issue. Easy points. I'm not taking much points. You have to advertise in newspaper only, but at least 2 days before the opening of issue, opening of bidding. Okay. Now, this newspaper advertisement shall also contain relevant financial ratios computed for upper and lower end of the price band. How did I arrive at that price? You said 100 and 120. How? Who said? Because of this computation that should be given. This announcement and relevant ratio computation shall also be disclosed in the website of the stock exchange. The ratio should also be given to SEBI as well as stock exchange. Point number 1, 3, 4, 5, 6 are okay. People 1, 3, 4, 5, 6 are okay. Only no. Decode point number 2. The entire point. I want the entire point. the cap on the price band. And in coupon rate, in case of convertible debt, I'm not taking, because convertible security also you have to follow this, but I'm not taking that. Let's I'm not striking. We are taking floor. The cap on price band shall be less than or equal to 120% floor price. Again, the cap of the price band shall be at least 105% of the floor price. What is 105? Okay. Good. So keep like this. So they are talking about two cap. I call those two caps into two. Lower cap, upper cap. Assume that your floor price is 100. Now tell me what should be the face value. Face value should be lesser than this thing, no? Because your floor price should be minimum more than face value. That's already given. So the face value should be somewhere in 80. We are not worried about face value. And they are saying your cap can be maximum of 120. Meaning upper cap is what? 120. Next cap is what? So if your floor price is 100, lower cap is 105, upper cap is 120. Okay. They never use two terminology, but we are interpreting. Ignore this coupon rate of convertible debt security in this scenario. Meaning, I'm converting. That time also price band means this thing, price band. But we don't need that. Issue price should be more, like the floor price should be more than face value. And your lower cap shall be at least 105% of floor price. Upper cap should not be more than 120 price. So minimum should be 105, maximum cannot be more than 120. Pakka? Only no? It should not be less than 105. At least 105, no? People, one more topic is differential pricing. Differential pricing, A, B, C point also you have to mark up. C point I'm not explaining. C point is similar to A. What is the scenario is not given in the material. In the following, in other scenario also, you have to follow 10%. But it's okay. It's the same point in A. Now people, 2 points. So I would say this is a normal issue. It's a book built issue. Okay. Sir, first scenario I'm talking about book build issue. Third point, people, I'm not explaining again. Just read, but you have to remember ABC. C point is nothing but A point in a different parameter. We don't have that parameter, but you have to remember. People, point number B. Sir, I'm going for a book build issue. You are paying to normal people and anchor investor. Price should be uniform. Simple. You cannot have a different price to anchor investor, different price to you have yet to see what is anchor investor, but understand you don't have to, you cannot do a partiality to a normal person or anchor investor. Easy point. Point number 8. RII, retail individual investors or retail individual shareholders or employees. For a normal issue, what you can do, you can have a differential pricing. So second point talks about no differential pricing. First point talks about in a normal issue, you can have a differential pricing. To whom? Retail investor, retail shareholder, or even your employees. Meaning at a discounted price up to maximum of 10%. Meaning 100 rupees is your price. You can allow them up to 10% of discount. What is 10%? Okay. Not more than 10% of my calculation. Okay. Not more than 10%. I'm very poor, I believe. 1 rupee. No, 10 rupee. Okay. So, they're telling you in a normal category, normal offer category, you can have a distinction, differential pricing. For whom? Retail individual investor, retail individual shareholder, but maximum discount allowed is 10%. But in case of book build issue, you cannot have a thing for between anchor investors and normal investors. If it's alternate way of book build, meaning again that second category also what? Book building only. There also you can have a discount to employees, not more than employees. Same point. First point is normal, second is normal, third is normal to employees. I mean book built in normal employees category. So today you have a good volume to complete, good amount of concepts to interpret. If you do one more page, it will be 261 now. 260. We'll do one more page. 261. It's 261. How many more pages? 325. 55 pages. 50 pages. Pages. 64. Fast track going in a ultra slow motion basis. But if happy if I'm touching 50 pages. Now 50 pages were 37 to 60 to 61. So only 34 pages or 44 pages. Only 24 pages. No. You can have a discount up to 10%. For employees and RIA, you can have a discount up to 10% from your price. That's called differential price. That's the purpose of differential price. People, last topic for the day. Your public issue, after a public issue, how much should be maintained by public? How much percentage? My total post issue capital is 100 lakhs. How much should be with public? Huh? 25. That's a standard thing as per some other regulations. Now, how do I ensure that 25 is met? So, law is giving you an option. How much should be the net offer to public category? Next topic is solid theory question. What is the minimum amount I should be with the public? Okay. People A, B, C, D. 4 points. Very, very tricky. Okay. Ready? Ready for the big topic? Sir, you have to help me with the reading. Okay. I'm just going to the material in column. Sir, how much is the net offer to public? They're telling you it's based on your post issue capital. Okay. So what is post issue capital da? Pre plus offer. Correct? So your total pre plus post comes to an amount up to crores. Correct? Then minimum 25% should be with public. Your post issue capital comes to 1,600. 25% should be with public. My post issue capital comes between and 4,000 crores. Correct? Now I call it a cream biscuit where you don't have a point. Third point. Sir, what about 4,000 crores to 1 lakh? You should have minimum 10% to the public. Clear? 3 points are clear. Now, so being a cream biscuit, first part was talking about 25%, second part was also talking about 10% biscuit. Second point we say, so we don't have a percentage. Think about 10%, meaning 10% of the upper cap. How much amount? We don't have a percentage, but up to 400 crore rupees worth should be with public. What is that? 10% of the upper cap. 10% of the upper cap. 4,000 into 10 is what? 400 crores. Up to 400 crores of money should be held by public. So if your post-issue capital comes to 1,500 crores, 25% should be held by public. Post-issue capital comes to an amount 2,000 crores, then at least 400 crores worth of shares should be with the public. Post-issue capital between 4,000 crores and 1 lakh crores, 10% of that amount post-issue capital should be with the public. Okay, clear? First 3 points are okay. So my post-issue capital comes to an amount which is more than 1 lakh. Then again, such a percentage or 5%,
5,000 crore rupees.
5,000 crore rupees.
At least 5% of each such case.
Okay. So for theoretical, you have 5% as well as amount of 5,000 crores. You have to remember a lot of points. Post-issue capital, either you have, if it's more than 1 lakh, at least 5% should be in public, or value worth 5,000 crores should be with public. Okay. Now people, some law says no, you should have minimum 25 with the public. Now see, in third scenario, you think how much percentage with public? 10%. Second scenario, 400 crores. Maybe that's very less amount. No, maybe. Now do you think that's fair? Law said for a second category and third category. Second and third category. Forgot. You have to bring. Sorry, forgot. Fourth category, try to bring within 3 years. Second category, bring it within 2 and 3 years. Okay, chill. Forgot. Okay. People, for a second and third category, you have to bring the amount to 10, because 25% is the thing. Try to bring that to 25 within a period of 3 years. 3 years. For a fourth category, what will be the lowest thing? Try to bring at least 10% by 2 years and bring 25% within a period of 5 years. So technically, they are trying to tell you, once a company is established, within 5 years, you should go with the first instance. 25% should be with what? No matter what. 25 should be with what? Public. 25% what? Post-issue capital. How are we ensuring? Line by line for other two categories. Because the issue size is no more, we are giving a relaxed provision to try to comply within 3 years or 5 years as the case may be. Online. Why?
We have given 5,000 crore rupee and at least 5%.
Okay. Your amount is going for say for example 10 lakh, 15 lakh crores amount. How much you have to maintain? 5% is what? 5% is will come under 7,500. Now, if it was simple, you could have gone for what? 5,000. Now you have to maintain what? 7,500. So it will be 5% or minimum 5,000. Minimum 5,000 or compare the highest cap when you compare with 5%. You have to compare both. Compare both. Online, take your own time, analyze.
For the second point, within 3 years, you have to have complete amount.
You have to bring that. Assume that your total size is 4,000 crores. Year 1, 400 crores. but try to bring at least 4,000 crores into 25% with the public within a period of 3 years.
For only the last thing they have given it further. Within
2,
5 years,
2 and 3, you have 3 years time only. Last thing you have 5 years, but subject to 2 times. You can bring first stage, second stage, bring and bring.
we can't default on the first.
You can do. If you're not doing, don't take for slowly till 5th year. At least by 2 years you should be completing. This was in correct. Scra. You remember these points? Scra, good. Studied. Manoj, did you study Scra? These points? Okay.
They did it in the last attempt, sir. I did it before attempt, sir.
So group two,
But for you also it was group only, no?
We got group.
But Chennai and Bangalore opposite of
Correct. So you wrote last group,
June I wrote the CMS, sir.
December you wrote group
Cleared
1.
group one.
You people?
We last December we wrote group 2, sir.
Huh.
They last.
Oh, June itself you wrote. You remember the something, some thousand something. Okay. So when did you clear group 1?
This is December.
This is group 1. Okay.
25 December.
So between group 2 and group 1, which you prefer?
Like in what context of the
Like which you find is easy?
it's not like easy, sir, because for group 2 I was doing it along with college, sir, so
Challenging. You had full study mode only. After degree you did
it's also very good.
along with the degree, but you didn't ever attended a class. Thank you for the day. Okay. Please revisit the provisions, come back stronger. Okay, you have a solid topic. Not extending because, okay, too much for the day.
Yesterday.
Can you show the first chapter, sir?
Abba, you can just
You'll
come
take
here.
video.
Okay. Okay, people. I'll ask them to send, but okay, you can take that. 1 second, I'll close the recording. People, thank you. Happy Eid. We'll meet tomorrow and try to wrap up these portions. Let's see.